Bank learn about the collapse of the Swiss lender?
Well, I guess the main thing one can learn about the collapse of Credit Suisse is the huge importance of governance, governance within financial institutions, because it is pretty clear that the events that led to the failure of Credit Suisse were not sort of a classic lack of capital or, let's say, too much credit risk relative to the capital. It was management failures, there was outright fraud, there were misinvestments, there was misbehavior, even at the top of the institution. And if you have a series of governance failures at an institution, it will lead to an erosion of confidence. That erosion of confidence will lead to deposit runs, which, by the way, already took place much earlier than March 23. There was already a significant outflow of deposits also in the fall of 2022. And so we have to remind ourselves, it is not only about capital and liquidity. Governance of financial institutions is of utmost importance.
And are there any questions about AT1s and the treatments of those particular instruments that you think can be drawn in the Dutch context?
Yeah, of course, there was a case where AT1s have been completely written down. So I think it behooves us to look a little bit deeper into this issue. Why the AT1s were drawn down, whereas equity was not fully written off. This was, by the way, completely in line with the contractual provisions of the AT1. It was just that not all investors had really read the contractual provisions, so they pretended they were surprised by it. But I think from every case, I think we should try to draw some lessons. But in this case, at least, it allowed the authorities to write down 16 billion Swiss francs, which was helpful to generate the interest of UBS to actually take over.
And now turning back to you, Chair Powell, we've got a very nice question here from Liu Zhan from ICBC, who asks, During COVID, the Federal Reserve applied high levels of monetary stimulus to further raise asset prices and support growth. Bloomberg called you Wall Street's head of state as a reflection of how strong your actions were on asset prices and how profitable your actions were for Wall Street. How does that make you feel, and how do you look back at this with the benefit of hindsight?
It makes no point of contact with the way I remember those days, so whatsoever. So I would just say this: if you put yourself in the place where we were in March of 2020, no one knew how long it would take to have vaccines. No one knew whether millions of people were going to die fairly quickly, or how long the economy would remain closed, or was it even going to be possible to reopen the economy if it had to be closed for a year? What was that going to look like? So I think it was so uncertain that I came to the view, and my colleagues did too, that we really needed to use our tools in ways that we hadn't before, because I would never have been, if things didn't work out, I didn't want to, if we had to go through a really deep, lengthy downturn, I would not want to have to explain why we didn't do that. So we did, and what happened is we announced these very aggressive, vigorous programs to support markets that we had never had to support before, the municipal market, corporate debt, these were red lines that we said we'd never cross. But the thing is, when we made the announcements, the markets healed themselves. So we made very, very few loans. We had something like 6 trillion in lending capacity. So the announcement effects of the things that we did, it really worked this time. So I think, broadly speaking, that the initial response was very successful and involved ultimately very, very little in the way of actual lending, a lot of announcements. Then the story goes on, and you have the reopening and the inflation, and we're still living through that. I think we'll have to judge that from a greater distance.
Anything you'd do differently in retrospect?
There's nothing I would do differently in the initial response. I think we did very well, and I think that the world continues to benefit from the strong response that we took, and we really avoided an awful lot of a bad tail risk there that could well have come due. You know, again, I would say on inflation, when inflation kind of unexpectedly arose in the first quarter of 2021, I think we're going to need to, I've tried to resist reaching, conclusions about that episode until, it looks so different now than it looked a year ago, for example. All the progress we made in 2023, I think we're talking about it in a completely different way now. I think 2-3 years from now, we'll be doing the same. So I don't want to try to learn lessons, in the middle of the story.
Sure. I think that's very fair. And another question here that's just been submitted from Abir, who asks, is Chairman Powell confident about the degree of independence of the Federal Reserve in relation to the executive branch of government? Do you think you have the powers that you need to defend your independence?
Yes, without question, I do. I think when, I talk to elected representatives in both political parties in the House and the Senate, and I think there's very strong support on both sides of the aisle, on both sides of Capitol Hill, for an independent Fed. I think people do understand that, we're just there to do our job on a non-political, nonpartisan basis. Nobody's perfect. Everyone makes mistakes, but the Fed is doing the absolute best we can with the tools that we have and the understanding of the economy that we have. I think that is very broadly understood and supported on Capitol Hill. So I'm less worried about that than the sort of things that have been in the press lately might suggest.
Okay. The same question to you. Do you feel as though the ECB's independence is well enough enshrined?
Oh yes, I think the ECB has one of the strongest statutory independencies of maybe all central banks in the world. And let's zoom out just for one moment. I mean, this inflation shock that we had, if you compare it to the previous inflation shock of the same magnitude, which was the 1970s, when we didn't have independent central banks, the main difference why I think now we have a credible prospect of getting the problem under control within, let's say, 3 or 4 years, while in the 1970s it took 10, 12 years, and the disinflation was so much more painful. The sacrifice ratios were so much higher unemployment, etc. The big difference is central bank credibility. During this huge inflation wave, inflation expectations continued to be well anchored. They never drifted away from 2%. This is so different to the 1970s. And why were inflation expectations so much better anchored this time around? Of course, that you can have a debate about it. It's about psychology, etc. But I would posit that the higher degree of central bank independence is clearly an integral part of that story. So this is a very tangible way in which we can show to society the benefits of having independent monetary policy making.
Would there be anything that you'd like to add to that on the case for central bank independence?
I think Klaus said it very well. I mean, I think in the United States we don't have quite the constitutional, I think, support that you have for it. It's a statutory arrangement. It's an institutional arrangement that has benefited the public. And that's all it is. Congress can change it any time they want. It would take Congress to change it, though. There's nothing the executive can do. Again, I don't think that's likely, but as long as what we're doing is keeping our heads down, working on the things we're supposed to be working on, doing our absolute best, and explaining ourselves as best we can, acknowledging mistakes, and going forward, and that we will have the faith in our independence that we need, and I think we do have that now, and I'm determined that we'll continue to have it.
And I think that's a very suitable note to end this discussion on. I'd like to take this opportunity to thank the Foreign Bankers Association for putting on this wonderful event. The organizers.
That was Federal Reserve Chairman Jerome Powell and ECB Governing Council member Klaus Knot speaking at a special event organized by Netherlands Foreign Bankers Association. Claire Jones from the Financial Times was moderating. So we got quite the broad discussion from Fed Chairman Jay Powell.
Yeah, you had a lot of headlines that crossed. Not necessarily anything that moved the needle, but just more of how Jay Powell and the Fed sort of thinks about things. He commented on today's hotter than expected PPI reading, said that it was mixed. He wouldn't call it necessarily hot. He did make the point that you might have to see restrictive rates and they might take longer to work. He definitely said service inflation is one that would take the longest. He kind of ruled out a hike. So kind of steady as she goes, and talking through how they think of the economy, and still kind of doubling down like, yes, monetary policy is restrictive. Just look at the job market. That seems to be their line.
Okay. I mean, I like the Bloomberg News reporting doubling down on the need to keep borrowing costs elevated, so that's pretty clear. Let's check in with Ira Jersey. He's Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. Again, Ira, I guess Fed Chairman Jay Powell will give him points, if for nothing else, he's consistent. What did you take away?
Yeah, very consistent. I mean, I think the important line was he hinted that they would just remain on hold for much longer as opposed to hiking interest rates. So, we have to, even though the market was pricing in some risk of a hike by the end of the year, he's basically taken that off the table and just said, look, we're going to stay on hold for longer if we have to and not cut, but we're not, next hike is probably not going to happen. Interestingly, we concentrate on the Fed here, obviously, because we're a U.S.-based organization and radio station, but I think some of the stuff going on in Europe was pretty interesting, and that was noted, including basically the idea that they pre-committed to a cut in June. So in a way, that might actually make the Fed's job a little bit more difficult, because if you have the ECB easing policy when the U.S. still has unacceptably high inflation, that might mean that the Fed has to stay on hold even longer, right? So we have to think about the interactions between these economies.
I'm sure they'd rather not think about those interactions, as they've really tried to sidestep that. But that's so interesting because, the ECB seems to be very much signaling June is going to be a cut. But after that, it's very clear they have absolutely no idea. For the Fed, it really seems to be TBD on when they actually cut. But after that, there's nothing to signal it won't be some kind of normal cutting cycle. That to me seems odd.
Well, the market is pricing for 2025 for very slow interest rate cuts at this point, right? So we've priced out about 100 basis points of interest rate reductions over the next 18 months. And, I think that's just endemic of this idea that you were talking about, Alex, is that we just don't know, right? It's completely conceivable that 6 months from now, we're going to be in the throes of a recession, and the Fed's going to have to be cutting interest rates pretty aggressively in order to stop the economy from continuing to falter. But all the data that's coming in right now on the hard data side is pretty good, right? Even the PPI data today that we were talking about with the services component, you look at services ex trade, which is about half of the PPI, that was up 3.9% year on year. And that's really the sector that's buoying inflation right now, right? It's not goods. Goods are basically flat. Energy goes up and down all the time. Food is actually starting to moderate a little bit, but you still have services prices that continue to go up at a pretty decent clip, and that's a huge sector part of the economy these days. So, how do you get those services wages down? And like Jay Powell noted, things like immigration have helped with that, but it hasn't really alleviated the wage pressures yet in those sectors. Meanwhile, in Europe, you do have a more pronounced slowing in the economy. It's more obvious, but that hasn't shown up in this side of the pond yet. And until it does, the Fed's probably, your base case, I think, at this point has to be the Fed's on hold until they say otherwise, and until we see the data really crack.
All right, Ira, thanks so much for jumping on with us. Really appreciate it. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, zooming in from our Princeton office. Looking at the markets here, the S&P is up about 0.1%. Same for the Dow. The Nasdaq's up about 0.3%. The Russell's up 1.1%. So the small caps having a day here. Yields come in just slightly. The 10-year's down about 2.75, about 3 basis points. It's called 4.45% on your 10-year. Let's check in with John Tucker. We'll get a Bloomberg Business Flash, see where things are going.
We'll get a reset in this Bloomberg Business Flash. Paul and Alex, being brought to you by BNY Mellon, the Inside, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential. Are you guys going to this?
We are going.
We are?
No,
or
you're
you
not.
are?
Opryland Grand Hotel.
I've never been.
Killer Water Park. I'm leaving it right there.
I'm not going.
Is Paul really going to be in a water park? Is that really happening?
Yeah.
BNY Mellon Insight. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. You can also meet Paul and Alex, apparently not me. The major stock averages, little changed. Data today, PPI, of course, the gauge of producer inflation, rising more than forecast, and is coming ahead of the consumer price index. Get that tomorrow. Of course, Jay Powell, you just heard his comments saying the Fed needs to be patient as it waits more evidence that rates are curbing inflation. And then he also weighed in about the possibility of actually raising rates.
I don't think that it's likely, based on the data that we have, that the next move that we make would be a rate hike. I think it's more likely that we'll be at a place where we hold the policy rate where it is.
All right, small business optimism also rising in April for the first time this year. The share of small firms planning price hikes that fell to a one-year low. This comes from the data from the National Federation of Independent Business. And we're also back to watching meme stocks, among the most active GameStop and AMC. More about that in just a moment from Nora. S&P 500, 7 points higher. That's up 0.1%, 52.28 on the index. The Dow Jones Industrial Average, 37 points higher. That's up 0.1%. And the NASDAQ 100 is up 44 points, a rise of 0.25%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. And that's your Bloomberg Business Flash, Alex Paul.
Thank you so much, John Tucker. Appreciate that. This is Bloomberg Intelligence Radio. I'm Alex Steele alongside Paul Sweeney. We cover all the economic and business news that you need to know. We helped you do that through our lens of Bloomberg Intelligence analysts. They cover 2,000 companies and 130 industries all around the world. We also keep you updated on moment-to-moment moves, particularly with meme stocks. And Nora Melinda joins us now from Bloomberg. All right, give it to me. GME, AMC.
So much going on. I've really been on the edge of my seat like the past 2 days. This is feeling like we're coming right back to 2021 because I wasn't covering stocks in 2021. So this is fun for me.
Okay,
this is fun,
enough.
okay?
She was still in high school.
Hey now.
That will one day be a compliment.
That's a compliment.
Yes. For Tucker, that was a compliment. Okay, so this is fun for you because?
Yes, so I'm watching GameStop and AMC. Of course, we're seeing a lot of retail traders and really the frenzy around meme stocks returning. Now, this is coming after a post yesterday from Keith Gill, and apparently he was one of the people who spurred the meme stock mania of 2021 under the name Roaring Kitty. And so we are seeing the shares of GameStop surging more than 110%. They're pairing to just about 60% now, and AMC, as well as a lot of shorted names, are rising in sympathy this morning as traders are really jumping in the meme stock rally here.
Well, I mean, just looking at the volume, I mean, for GameStop, darn near 100 million shares have traded. AMC, 292 million shares have traded. There's some real money changing hands here.
Behind it. I mean, there's so many people jumping in.
Can you imagine being this popular that you added $4 to $6 billion worth of market cap to a stock in
Casually.
24 hours?
Yeah.
But this time around, where are the shorts? They're not
as bad. They're not as high.
Right.
They're 140%, I think, was it was before,
Okay, so
and
it's
then
not
now it's
like-
much less. So any sort of short covering potential may not be as extreme. What about actual stocks that are doing things based on fundamental things?
I mean, there are a few of those still out there. We're looking at Home Depot. Now, this company is falling. The shares are pairing their decline, but it was earlier down as much as 2.3%. Now, this is after the company reported a 6th straight quarter of sales drops in a row. And one thing I learned last earnings season is that apparently Home Depot caters toward professionals and Lowe's is for commoners like myself. But we have Home Depot really seeing a bit of a decline here. Of course, we're going to hear from Drew Reading later this hour, if I'm not mistaken. Okay. He'll be talking about it a bit more as we look at home builders, but this is due to the weak housing market that we've really been seeing, as well as a lower demand for big ticket items. So seeing a bit of a pullback there.
All right, I guess we've already tricked out our basements and our
Hold on, though. Let's ask. Let's ask the guy.
Let's
John
ask him.
Tucker is redoing a closet into a bathroom for reasons unbeknownst to myself. Do
Yes,
you go
sacrilege.
Lowe's or do you go HD?
They're both pretty crummy. I would have to say, here's my complaint
Okay.
about both of them. They're expensive and they sell a lot of crap.
So do you forage and what do you do?
No. Well, I had to, among other
Chop
things,
down your trees?
the Moen shower valve that I had to put in, I purchased that at the GPS supply store, at the
Okay.
general plumbing supply store. So I go to the the places that the
tradesman
contractors go
goes,
to.
yeah.
The tradesmen.
I see.
Okay.
That's because he's
pros,
cool.
yeah.
And then wrapping up with Plug Power. So that's actually helping the NASDAQ really outperform, particularly when it comes to volume. What's going on here?
Definitely. We are seeing Plug Power shares surging as much as 70%. Now, this is its biggest gain in 7 years. It's pulled back to about 30% here, but this is coming after the Biden administration offered the company a conditional commitment for, let's round up, about $1.7 billion in loan guarantees to build up 6 facilities. And of course, this is really crucial for the company because it's really faced a cash crunch in the past year. It's been burning through capital to develop its production capacity. And so what's really been in focus, especially we remember back in November, it posted worse than expected third quarter earnings and warned that there was a doubt that it would even be able to stay in business. So this is a pretty big jump here for the company this morning.
Wow, I wonder if anybody bought stock in the last few days before this announcement.
Perfect timing, right?
I wonder if we'll see that story in a month or two.
Mm-hmm.
All right, Norma Linda, thank you so much. We appreciate that. Norma Linda, she covers the equities for Bloomberg News. Let's get right to our next guest, Eric Martin, international economic reporter for Bloomberg News. He joins us from our Washington, D.C. office. Eric, you've got some reporting out here. President Biden adds tariffs on Chinese chips, critical minerals, EVs. Is this just an election year kind of thing, or is there teeth behind this?
Well, part of this is to protect the investments that the Biden administration has made over the last several years. We've seen, of course, the CHIPS and Science Act. We saw the Inflation Reduction Act with investments in U.S. production of semiconductors, of green technology. And so part of the idea here is to make sure that the alleged unfair competition, subsidization, and intellectual property theft coming from China do not interfere with the purpose of these investments made by the administration with American taxpayer dollars. So that's part of what is behind the strategy that we're seeing unveiled here today.
Is it preventative, though? I mean, for the EV, for example, China doesn't sell a lot of EVs here. So can you have these preventative tariffs?
Certainly, a big part of that is preventative. They've seen what has happened in, for instance, Europe, where Chinese EVs have started to invade that market. In Europe, earlier this year, the EU announced tariffs on Chinese electric vehicles. Also looking at Mexico, where Chinese EVs make up about 20% of the market. And so even though they're not yet in the U.S., there is this concern about this kind of an advance, similar advance in the U.S. as elsewhere, taking people by surprise and happening very quickly, and so wanting to get out by quadrupling this tariff rate on EVs before Chinese vehicles potentially could flood the U.S. market.
So how about the folks that think about free trade? Are those days over?
Yup.
Well, that's one of the most fascinating things here, right, is that the Biden administration really, until this point, has continued a lot of the China policies from the Trump administration. They've left in place and are leaving in place, in fact, today, tariffs that apply to more than $200 billion in annual imports from China. And so, we're seeing a continuation of the Trump policy to a certain way. I spoke to an analyst who said that this is kind of trying to almost out-Trump Trump in terms of the strategy here, but also the Biden administration feeling like the Trump administration really brought a sledgehammer to what should be a surgery in terms of trying to key in on some important and strategic areas and increasing the tariffs there, but not the across the board, for example, 60% tariffs that President Trump has touted on the campaign trail thus far.
So my home in the world is energy, so I'm really interested in the energy transition. Liam Denning of Bloomberg Opinion is my colleague there, and he was talking about how can you have deglobalization and decarbonization at the same time? And these tariffs, I feel, really try to address that or don't address that point. How does the administration view that connection?
Absolutely. That is one of the key tensions here, is the fact that China has been the major supplier of things like solar cells and green energy technology needed to achieve that transition that you just spoke about, Alex. And so that's going to be one of the things that we see going forward. These tariffs will be rolled out between 2024 and 2026, but seeing how can they accommodate and continue to move forward the green energy transition at a time when they're also trying to foster growth in the American industry, which really until this point has been swamped by Chinese product and Chinese green energy goods coming into the U.S.
So where do you think the Biden administration wants to take this? I mean, are they geared up? Are they open to like a trade war with China?
Yeesh.
That's a fascinating question. Certainly, nobody is losing points with voters in 2024 by trying to be tougher than the other side on China. We've seen that kind of maneuvering both by former President Trump and by the Biden administration to be tough on China. But again, the Biden administration tries to highlight that they don't see this as an across-the-board approach, that they want to continue doing trade with China in areas that are not a danger to U.S. national security interests, and to really hone in on the areas where they see China undercutting the investments being made by this administration and putting at risk U.S. supply chains and the growth of nascent U.S. industries.
All right, Eric, thank you so much for joining us. Really appreciate it. Eric Martin, international economic reporter for Bloomberg News, coming to us from Washington, D.C. Well, last Thursday, I attended the Boston Consulting Group Edge Expo in Boston. I had a lot of great conversations with the execs at BCG, one of which was Brian Colley, global leader for the automotive practice. He focuses on what auto companies should do now to secure their future in a rapidly changing industry. I began by asking him where we are in the evolution from internal combustion engines to EVs and what he's hearing from clients. Let's listen in.
Very excited about the transition that's taken place from internal combustion to battery electric vehicles. And the transition is still taking place. Certainly the news cycle over the last 9 months has turned more negative. I think with good reason. We've had rising interest rates that have changed some of the economics for consumers. We've had a number of vehicle manufacturers that came to market with battery electric vehicles that frankly probably weren't a good fit for particular customer segments, talking large trucks, SUVs, where the battery technology is not yet there to provide the range, the performance in cold weather, et cetera. And we've had a number of quality issues, frankly, as vehicle manufacturers and suppliers are dealing with new supply chains, new component suppliers. The quality, frankly, is lagged on a number of high-profile launches. That said, the underlying economics and drivers of the transition from internal combustion to battery electric vehicles remain as compelling as ever. It was never going to be a straight line, easy path. It was always going to be rocky. I think people are now coming to realize that. But the underlying economics in terms of the regulatory push, in terms of the total cost of ownership as battery prices come down, as we drive greater scale, and most importantly, just the great new vehicles that are coming to market here over the next 5 years, we're very confident that we're still going to see the U.S. market move to battery electric vehicles in a very, very meaningful way.
What do you think, with a smidge of hindsight here, kind of got us to this bumpy patch here? Was it, I've heard anything from affordability to, and I'm sure it's some combination of affordability, I can't find the charger until there's enough chargers relative to gas stations, I'm not a player. What are some of the big issues that you hear back from your companies that they're hearing from their customers?
From a customer standpoint, we actually are trending in the right direction. We had 8% of new vehicle sales last year were battery electric. A lot of the first wave of adoption for battery electric vehicles are many folks who are a two-car family where the charging solution is at home, where it's doesn't need to necessarily cover all of their trips, whether, cross country, whatever, maybe where it is frankly more difficult. But for operating in their urban environment or the suburban environment, battery electric vehicle has shown to be a good fit for their needs. And so from a consumer standpoint, we have made strides in the right direction. 8% penetration last year. We just completed a survey of 3,000 consumers in the U.S., and nearly 40% said that for their next vehicle, they're going to be looking first and foremost for a battery electric vehicle. They do have some conditions, though, that they're looking to see. They do want to see a bit more improvement from a range. They want to have more convenient charging on those rare occasions where they are taking the vehicle outside their home market. And they want to see a more attractive price. And that's something, frankly, that the vehicle manufacturers are giving them through some of the incentives that we've seen on electric vehicles here over the past year. There's also a question, though, from a vehicle manufacturer standpoint, how do you actually make their business model work? And that, frankly, I think is the harder problem. The vehicle manufacturers are bringing great product to market. The consumers are excited about the tech infusion. They're excited about the ride, the feel, the experience. That's headed in the right direction. But vehicle manufacturers have to learn how to make their economics work. And today, most vehicle manufacturers are losing lots of money for every battery electric vehicle that they make. Only one player here in the U.S. market is earning profit on their battery electric vehicles. We know who that big player is. Others are struggling, and it requires them to, on one point, both think differently about how are they positioning these vehicles in the market. It's not enough just to be electric. You have to be very clear in terms of who your customer is and position the entire product offering, customer experience, channel support towards meeting the needs of that specific segment. And then you've got to think differently about your cost structure. We need to see greater partnerships, not just across vehicle manufacturers, but between vehicle manufacturers and suppliers. There has to be more collaborative partnerships. There needs to be more platform sharing where you can drive greater scale on individual program economics. And we need to continue to see innovation on the battery front, moving from NMC to LFP to LMFP, different chemistries that will allow us to reduce our dependence on harder to find, more expensive materials that can also drive greater improvements in range and ultimately a better customer experience. When we get all those things to come together, we do see a path for vehicle manufacturers turning to profit.
I know the consultants are really good at doing nice market forecasts 5 and 10 years down the road. Where do you think maybe just the U.S. market will be in EV penetration 5 to 10 years down? Let's call it 10 years down there, because I think this is going to be a long play.
It is a long play. We do think when you look out over the next 10 years, we expect to see penetration in 40% range of new vehicle sales. And that's when you look at the underlying economics for where we see battery electric vehicles being a best fit for a particular customer segment. We believe the market is there. We believe we get very excited about the number of new products that are coming to market that are frankly far better vehicles than what you could typically get in an internal combustion. We also think that vehicle manufacturers are being very smart in introducing more aggressively hybrid type technologies as a bridge technology to help consumers make the walk from internal combustion to ultimately battery electric, and in some cases using hybrid as that bridge technology, again, for larger vehicles, SUVs, things of that sort.
I'm glad you brought up the economics here, because my auto analyst at Bloomberg, he's an old school auto guy, and he says, listen, Ford ain't going to do anything because they're making so much money on the F-150 that there's no financial incentive for them to really make the big investment. And sure enough, it looks like, at least in the short term, he's kind of right here. Is there a realistic path from a cost of goods sold perspective, from a labor perspective, that Detroit can get to those economics?
They can. And it's not going to be easy. Like I said, it's not going to be a straight line trajectory from where we are today to a all battery electric future. The internal combustion vehicle will continue to be here in the U.S. market for many, many, many years to come, well into the next decade, if not beyond. And that's because there are certain parts of the consumer segments that an internal combustion is the best vehicle for their particular needs. And you do see that when you're talking large trucks, you're talking large sport utility vehicles. That said, if you look at the commitments the United States, Europe, other parts of the world have made towards climate change and trying to combat the warming of the planet, if we are serious about tackling that, then transportation has to do its part.
All right, that was Brian Colley. He's the global leader of the automotive practice at Boston Consulting Group. Spoke with him last week up in Boston, talking about the EV business. Bumps in the road for sure in the initial number of years of the rollout, but he thinks maybe 10 years, 40% of new car sales in this country will be EVs, so we'll see how that plays out. All right, let's get a little bit of a reset right here. We'll check in with John Tucker and a Bloomberg business.
All right, and this Bloomberg Business Flash being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Market edging higher in the run-up to the key inflation data. We get the CPI tomorrow. That was after the PPI today. And Fed Chair Jerome Powell, once again, you heard it here on Bloomberg, signaling the Fed's going to remain on hold before embarking on the interest rate cuts. Higher for longer. S&P 500 right now up 7 points. That's up 0.1%. We're at 52.28 on the index. The Dow Jones Industrial Average 9 points higher at 39,440. And the Nasdaq 100 53 points higher. That is up 0.3%. 2-year yield down 3 basis points. That's at 482. The 10-year 2 basis points lower. That's at 446. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, Paul and Alex.
All right, thank you so much, John Tucker. I'm Alex Steele, alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. Also check us on YouTube. Jay Powell speaking in the last hour. Part of what he also spoke about was in the U.S. non-bank lending area has been growing very fast, but it's not obvious that that poses any kind of instability or a loss of stability. So let's dive a little bit more into, say, private credit, for example. Our next guest is sort of right in the middle of it. Patrick Kennedy is founding partner of All Source Investment Management, and their clients are really looking at things all across asset classes like private equity, private credit, private real estate, hedge funds, global equities, you name it, they're looking at it. Patrick, great for you to join us. Thank you so very much. Talk to me about the growth of private credit.
Yeah, absolutely. I mean, I think one stat kind of sums it up. So the private credit market has doubled in asset size since 2018. It's now $2.1 trillion. There's all sorts of private credit out there, but what typically gets talked about most is direct lending, which is basically your most simplistic version of private credit. You're giving a privately held company a loan that's typically backed by an asset. I think that's where the concern is amongst institutional investors and some of the regulators, simply because it's an oversimplified asset class at times. You know, folks think that, okay, it's an asset-backed loan, rates are going to float, so essentially you're going to get a higher return as rates go up. If rates stay higher for longer, you make more money. And while that's mostly true, there's a lot that goes on underneath the hood, right? So if rates do stay higher for longer, can the company afford to pay that loan, right? And then on top of that, you know, we look at, well, what's the asset backing the loan? Are we comfortable owning that asset? What's the loan to value? So there's a lot that can go into the overall underwriting of that. We like to say that the return is made throughout the underwriting process rather than when the statement arrives, right? So yeah, you know, I think it's important to understand the technicals of any fund, their underwriting process, rather than just taking a broad brush approach at private credit. Because we've had a lot of, you know, statements out there that all the private credit markets are overvalued, they looks like a bubble, things like that. I think, again, it's more at the manager level and making sure that the manager is doing a good job with the underwriting process versus the asset class as a whole.
Hey, Patrick, how about private capital into professional sports? We see the value of sports teams just go up dramatically, almost across the board, everywhere you look. And nobody ever really got poor owning a sports team, it doesn't seem like. Talk to us about private equity, private credit getting into that investment class.
Yeah, that's pretty exciting, right? So there's talks right now with the NFL allowing private equity ownership. As a fan, I don't know how I feel about that, but as an investor, I'm pretty excited for it. So one thing that we looked at recently was the NBA. So the NBA has allowed this model where private equity can come in and buy a minority stake. The way it works within the NBA is 45% of any team's revenue is driven from the actual league. So think media rights, things like that, mostly media rights. And then 55% is driven by the team. So concession tickets, that sort of thing. So what it allows investors to do, though, is invest in a smaller team and still participate in the overall league revenue, which I think is a nice feature. If you look at the big four in general, right? So baseball, hockey, football, and then basketball, all the professional sports teams, they've compounded at about an 18% annual growth rate on average since 2012. So it's been pretty impressive. With the NBA in particular, just because we just did some underwriting on that, we know the numbers pretty well. The NBA, the valuations have outperformed both in the dot-com bubble and 08. And our real test was, well, how did it do during COVID, right? Because stadiums were empty. You know, how did those valuations get impacted? And believe it or not, the average team still did a 10% CAGR throughout COVID because of the power of the media rights.
Wow. Yep. That's really impressive.
Yeah.
I don't know, but when you say something like you never lose money betting on sports, like that makes me nervous. I gotta say.
Yeah, absolutely. So, I mean, the way we approach it is rather than buying any individual team, we're looking for a vehicle where we can get ownership in multiple teams, right? So As much as I want my Patriots to win the Super Bowl every single year, I know they're not going to, right? So from an investment standpoint, we look at vehicles that have at least a few teams within it from a minority ownership standpoint. And again, it's exciting because, you know, you go back 10 years ago and it was really just the ultra wealthy that could own this asset class. So leave it to private equity to open it up for other investors.
So got about 30 seconds left, Patrick.
Yeah.
To what extent do you think these big tech companies like Netflix, Amazon are going to really get in a big way in terms of investing in sports or sports broadcasting? How do you think that's going to work?
Yeah, I mean, you see Amazon going in right now, right? So they own Thursday night. It's not too many organizations that own a day of the week, right?
Yeah.
So I think it's very powerful from a media rights standpoint. You've heard, you know, for the last 10 years that media rights have been bid up to the point where the valuations don't look attractive and that sort of thing, yet they continue to power forward. So my view is I think that with Netflix coming on board and Amazon coming on board, that may continue for a bit. Again, Amazon has just entered the space with Thursday night games. I think they're going to try and expand that. Netflix is now talking about getting into it. So if it really ramps up on the streaming side, I think those valuations can continue to get bid up for some time.
Wow, that'll be interesting to see. All right, Patrick, thank you so much for joining us. Patrick Kennedy, he's a founding partner at All Source Investment Management, looking at the private capital, the private equity, the private credit, and with a little bit of a focus on sports franchises. And again, there are some opportunities for private equity to get into the NBA, not yet into the NFL, but they are looking at it. And knowing the NFL, they will get as creative as they need to be to get access to that capital. All right, right now, with our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex, John, Donald Trump's former lawyer and fixer, Michael Cohen, is back on the stand in the former president's hush money trial in New York City. Prosecutors have been asking Cohen about the arrangements to pay for Stormy Daniels' silence about her alleged affair with Trump. Before today's session in New York, Trump railed against the case.
There's never been anything like this in the history of our country. It's a scam. It's election interference at a level that's never taken place before.
It's anticipated that Donald Trump's team is going to go after Cohen on cross-examination because he has credibility issues. Secretary of State Antony Blinken made an unannounced trip to Ukraine and met with President Volodymyr Zelensky in Kyiv. Blinken's visit comes weeks after Congress approved a long-delayed aid package that provided $60 billion to Ukraine.
We're determined, along with many other partners for Ukraine, to make sure that you succeed on the battlefield. We're equally determined that over time, Ukraine stands strongly on its own feet, militarily, economically, democratically.
Secretary Blinken's visit comes as Russia has launched a major offensive in the northeast Kharkiv region. Ceasefire talks have apparently stalled between Israel and Hamas. Meanwhile, National Security Advisor Jake Sullivan pushed back against criticism of Israel's actions inside Gaza. Sullivan says while they have some concerns on some of the IDF's conduct, they don't believe it rises to the level of a genocide.
We believe Israel can and must do more to ensure the protection and well-being of innocent civilians. We do not believe what is happening in Gaza is a genocide. We have been firmly on record rejecting that.
Sullivan says the U.S. still believes it would be a mistake to launch a major military operation in Rafah. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the newsroom with this Bloomberg Business Flash, being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interests at ibkr.com/RIA. And I'm sure the next time they have a conference, I won't be invited to that one either. Anyway, major stock averages. Am I bitter? The major stock averages mixed a little change as investors wait for the next big piece of inflation data, the Consumer Price Index that's out tomorrow morning. Higher for longer. Inflation is stubborn. Those are the messages from the Fed Chair, Jerome Powell, as he was interviewed in the Netherlands.
And I expect that inflation will move back down on a monthly level, on a monthly basis, to levels that were more like the lower readings we were having last year. I would say my confidence in that is not as high as it was, having seen these readings in the first 3 months of the year. So we're just going to have to see where the inflation data fall out.
And meme stock traders again piling into shares of GameStop and AMC Entertainment Holdings a day after both soared in a revival of the retail frenzy. GameStop right now up 63%. AMC Entertainment shares 71% higher. Then you have Home Depot. Those earnings were out this morning. String of negative sales extending into a 6th straight quarter. Home Depot shares right now, they're down 0.6%. Overall, the S&P 500 up only 3 points, 52.24 in the index. The Dow right now dead flat, unchanged, 39,431. And the NASDAQ 100, 30 points higher. That's up 0.2%. Treasury yields, they're lower. 2-year yield down 2 basis points, 483. The 10, that's down 1 basis point. We're at 447. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
Thank you so much, John Tucker. I'm Alex Steele here with Paul Sweeney. This is Bloomberg Intelligence Radio. We cover all the top news in business and economics through our lens of our Bloomberg Intelligence analysts. They cover 2,000 companies in 140 industries all around the world. And we're joined by one of them right now. Drew Redding, Bloomberg Intelligence U.S. home building analyst, is joining us on Home Depot earnings. So that stock is down by about 0.7%. We're looking at, quote, continued softness in certain larger discretionary projects. That's never good to hear. And that same-store sales just not great. And spring was delayed. Drew, where do same-store sales bottom out here?
Yeah, so sales were down about 3%. As you guys heard, that was the 6th straight quarter of declines. A little bit below consensus, but I think it was really in line with what the buy side was probably looking for. And I think that's why you're seeing a muted stock reaction today. I think the important thing to note is that they reiterated their full year view. So all in all, not much in the quarter that changes the thesis. In terms of when things bottom out, I think the widely held view is that as we get to the late part of this year, second half into the fourth quarter, you could start to see same-store sales start to inflect. Maybe you get a little bit of a helping hand from housing as we exit the year.
So Drew, give us a sense, what are these companies, the Lowe's and the Home Depots, what are they saying about their customer base? I mean, are they stretched? Are they struggling? Have they spent all their stimulus? What are we hearing about the consumer from these two companies?
Yeah, great question. I mean, the Home Depot and Lowe's consumer tend to be homeowners. That's their predominant customer. They tend to be higher income, so they're a little bit more well off. But look, they're still at the mercy of everything that's happening in the broader economy. You've got the cumulative impact of inflation over the last several years. You've got a weak housing market. And what we're actually hearing is that a majority of the weakness is centered around those big ticket discretionary categories. An interesting dynamic within that they actually alluded to during the conference call is that over the course of the last year, a lot of the weakness in big ticket was concentrated in those categories that were pulled forward during the pandemic. So they call them single item purchases. Think things like grills, patio furniture, outdoor power equipment, things that you tend to purchase once and then you don't need for a while. But they're starting to note normalization in those categories, which is an encouraging sign. On the other hand, where they're seeing more weakness is in the categories that tend to be debt financed. where those higher interest rates are having an impact on the consumer. So they called out, kitchen cabinets, countertops, really kitchen and bath, and that's about 7% of their sales. So it's an interesting dynamic that's at play there.
That is. So, and it all points to what we're kind of learning about the consumer anyway. So John Tucker, when he's redoing his closet to his bathroom, is going to a contractor supply store to buy stuff because it's cheaper.
Well, it's not cheaper. It's just if you're going to do something like that, a big project, you go with quality. And my argument is the suppliers to Home Depot, I find a lot of them are kind of junky stuff.
So to that point, how many people are like John Tucker?
Just my opinion.
Sort of just going to different options. And maybe that's a quality thing. Maybe it's a pricing thing.
Yeah, look, I think the home improvement space as a whole is really under pressure. And what we've heard is that, people are deferring their projects. So they're taking, instead of doing that large kitchen bathroom model, maybe they're doing something smaller, or they're actually starting to trade down in certain categories within the kitchen and bath. In terms of, the supplier situation, and it's an interesting dynamic that, you mentioned plumbing and, where are contractors purchasing their goods? Is it Home Depot or is it a competitor? The pro market is really the area of focus for Home Depot, and they're attacking it in an interesting way, and that's by going after what they describe as a $250 billion opportunity for more complex projects. And basically what they're trying to do is consolidate supplier relationships. So if you have a contractor who would typically manage a relationship with a door distributor, windows, decking, plumbing fixtures. They want to take that all under one umbrella, the Home Depot umbrella, and kind of make it a one-stop shop. And that's a big opportunity for them.
Hey, Drew, let's step back. In addition to the home, these retailers, you also follow the home builder sector in general here. I got it. A 30-year fixed at north of 7% here. I mean, where do rates have to go to free up some inventory in this market here? Because if you talk to a real estate agent, there's nothing going on out there.
Yeah, and once again, I think you need the distinction between what's happening in the existing home market and what we're seeing in the new home market. Rates have come down to just under 7.25% most recently. So that means that when you go into the new home market, the builders are buying down your rate somewhere in the 5.5% range. And that's how they're getting traffic through the door. They're able to make those monthly payments more palatable than what you're seeing in the resale market. Now, we talk about the resale market, and that's really what's important for the Home Depots of the world. It's hard to get excited about, a significant rebound in activity when you have rates that are above 7%. The good news is that, if you could call this good news, is we're hovering at multi-decade lows in transaction activity. So we're probably somewhere at trough levels at this point. So we think as we get through the end of this year and into next year, maybe you start to get a little bit of a rebound. But again, I think, to see more activity, you'd probably need to see rates somewhere in the 6% range.
I think that would make sense. Paul, would be refinancing if it goes a little lower. I just want to point out what's happening in the conversation in the radio studio. So, Drew, I'm building on an extension to a house that I have with my husband up in the Berkshires, right? And John Tucker's trying to convince me to do it myself.
Yeah, just go to YouTube.
He's like, go to YouTube. Yeah, just go ahead, rent a hoe and
I didn't say a hoe, a backhoe.
Whatever.
Like a machine.
Or dig up the foundation by hand and put some things down. That's a bad idea, right?
Well, I don't know your experience level, but that sounds like a pretty involved renovation, so you might want to get some help with that one.
You have to have nothing else going on in your life to take on something like that. Is that what we're saying here, John?
I mean, apparently John Tucker says that for his guest house that he dug the foundation by hand.
By hand.
Apparently he
mixed
grew up
it with
in
my
the
own
1700s.
mixer. It was just like I went through like 1,000 bags of concrete mix. But
so did it pay off for you to do that?
Took me about a year.
Yeah, but is this...
Broke my back. But I'm a better person for it.
Are you though?
I don't know.
Yeah, and there's, Jersey Shore Guest House.
Yeah, exactly.
You guys are all invited.
All right, Drew, thank you so much for joining us here. Drew Redding, he is the home building analyst for Bloomberg Intelligence, joining us from Princeton, New Jersey. I don't think that's going to
I'm not going to do that. Let's just be very clear.
No, I have people who do that for me.
I mean, I'm too tired. There's no way. But, to the point, that we're probably going to go to Home Depot and buy stuff, though.
Okay.
So we're still, contracting and things like that.
Professional install.
Right, but I find it interesting how the things that are bought on debt are the things that aren't holding up well, which is exactly right. It's like once we get lower rates, maybe things open up. That's like across the board on the entire economy, basically.
But listen to Fed Chairman Powell from Holland today.
Yep.
It didn't sound like he was keen to lower rates.
Nope,
anytime soon.
wait. But yet the equity market, a whole lot of nothing. You have the S&P is up by, I don't know. Nope, it's not even. It's flat. S&P flat on the day. This is Bloomberg. Happy Tuesday.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company stories we're following. This one from the Journal, disturbing on a lot of fronts. Fake studies flooding the publishers of top scientific journals, leading to thousands of retractions and millions of dollars in lost revenue. The biggest hit has come to Wiley. This is the 217-year-old publisher that's based in Hoboken, New Jersey, which today is announcing that it's closing 19 journals, some of which were infected by large-scale research fraud. In the past 2 years, Wiley has retracted more than 11,300 papers that appeared compromised. According to a spokesperson, they closed 4 of those journals, and they're not alone. At least 2 other publishers have retracted hundreds of suspect papers each, as several others have pulled smaller clusters of bad papers. Although this large-scale fraud does represent a small percentage of submissions to journals, it does threaten the legitimacy of the nearly $30 billion academic publishing industry. BYD, this is the leader in electric vehicles in China. They plan to debut their first truck in Mexico, next door to the world's largest pickup truck market. BYD set to unveil its Shark plug-in hybrid truck today at an event in Mexico City. While BYD has previously said the Shark will be distributed globally, they don't have any plans to sell in the U.S., the biggest single market for pickups at the moment. And Kraft Heinz looking to sell Oscar Mayer, the big maker of hot dogs, cold cuts, and bacon. The Journal reports under the new CEO, Kraft Heinz is working to rejigger its portfolio as consumer interest in health and nutrition grows. Are they saying that hot dogs are not healthy? Maybe. And that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the great analysis from our analysts that cover about 2,000 companies and 130 industries worldwide. And we also keep you updated on everything you need right now that is world and national news with Michael Barr. Michael?
Thank you very much, Alex, Paul, John. It's another day of testimony from former President Trump's former fixer, Michael Cohen, in the hush money trial. Yesterday, Cohen told a jury that Trump played a pivotal role in orchestrating payments to silent stories before the election in 2016. Trump has some high-profile guests visiting him today, like House Speaker Mike Johnson. Johnson said he came to support Trump on his own.
The American people are not going to let this stand. Election day cannot get here soon enough, and we will continue to shine a light on all of this in Congress because we have that constitutional responsibility.
Speaker Johnson is traveling today with Trump in his motorcade, along with North Dakota Governor Doug Burgum, Florida Representatives Byron Donalds and Corey Mills, and former GOP rival Vivek Ramaswamy. Secretary of State Antony Blinken made an unannounced trip to Ukraine and met with President Volodymyr Zelensky in Kyiv. Blinken's visit comes weeks after Congress approved the long-delayed aid package that provided $60 billion to Ukraine to repel Russian attacks.
We've traveled a long road together these past couple of years, and we've seen the extraordinary courage of the Ukrainian people. And we know that that courage endures, and that only reinforces our determination to do everything we can to help ensure your success.
Secretary Blinken. At least 8 people are dead and dozens others are injured after a bus carrying farm workers crashed with a pickup truck in central Florida. The bus overturned in Ocala on State Road 40. Alabama has become the second U.S. state to ban lab-grown meat, joining Florida, which earlier this month outlawed the alternative protein. Supporters of the law argue that it protects cattle ranchers and farmers from lab-grown meat competitors. Crystal Anderson is a researcher at Tufts University.
Cultured meat or cultivated meat is the production of meat without using the whole animal, but using animal cells.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, John.
All right, thank you so much, Michael Barr. So here's one for Paul. This came from the Journal, but our Lucas Shaw also reported it here at Bloomberg, is that the Nielsen data is finally out, and it's some really interesting data. Nearly 10% of the time Americans spent in front of the TV screens last month was on YouTube's flagship smart TV app. Now,
learning
Disney
how to mix and pour concrete for foundations.
That's right.
Do-it-yourself home building.
And I would probably up that a lot if I was building my own house. Now, Disney still crushes here. They garnered, crushes maybe an understatement, but crushes 11.5% of total TV viewing time. But then comes YouTube.
Yep, it's really amazing. And what's really amazing for somebody who's followed this industry for 35 years, we finally have from Nielsen the data which for the first time captures the full audience that entertainment companies reach across cable, broadcast, and streaming. So now you get it, and if you can get it down to the show level, which they can, that's when you start thinking about, gee, what should I pay for a show when I really know who's watching it, and what can I charge for advertising? But the big thing is here is the real growth of of Google's business, YouTube. And I was looking on Twitter and some of the media feeds I follow. They were saying at Amazon's upfront, which are happening this week, all the upfronts for all the big networks, really a buzz for Amazon.
Really?
And decidedly different from the traditional networks. You can just sense just the seismic shift in advertising dollars and advertisers' interest in the streaming services at the expense of the traditional networks.
And you hear the cries of pain
Yes.
from like NBC, CBS, and ABC.
Yeah.
Is it just because like you can choose without commercials and you can do sexier things?
Yes, I think
Straight
it's
up.
just yeah, and it's just and the streaming it's just a great technology, and you can how do people you want to consume what you want, where you want, when you want it. That's what the industry's been pursuing for 20 years. It's now here, and now Nielsen, God bless their souls, they can actually measure all this stuff so you can get it properly valued in the marketplace. I think in terms of advertising and all that kind of stuff. Balance of Power with Joe Matthew from Washington D.C. starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Here come the Biden tariffs. Welcome to the fastest show in politics. As the president today rolls out new tariffs on goods from China, including EVs, fourfold increase. But will it be enough to move voters is the question. We'll preview the president's announcement with Bloomberg's Laura Davison, and we'll talk details later this hour with White House economic advisor Gene Sperling. Michael Cohen's back on the stand in Donald Trump's criminal trial in New York today. Also at the courthouse, the Speaker of the House and several Veep Stakes contestants. We'll get the latest from June Grasso at Bloomberg Law, and we'll have analysis today from our signature panel. Rick Davis and G.D. Shanzano are with us for the duration. We start, as always, on Wall Street. Let's get to trading right now with Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much. And here's what's going on, Joe Matthew. We got U.S. stocks now trading mixed. Dow Industrials dipping into the red. Lower, little change, down 7. S&P right now higher, little changed, up 0.5 point. While NASDAQ is up 38, continuing to push higher by 0.2%. 10-year, 4.47%, with a 2-year now yielding 4.83%. Spot gold today up 0.4%, 23.46 the ounce. And West Texas Intermediate crude down 1.7%, 77.78 a barrel on WTI. Fed Chair Jay Powell says the U.S. Central Bank needs to be patient as it awaits more evidence that high interest rates are curbing inflation, doubling down on the need to keep borrowing costs elevated for longer. His remarks broadcast from Amsterdam live here on Bloomberg Radio.
I don't think that it's likely, based on the data that we have, that the next move that we make would be a rate hike. I think it's more likely that we'll be at a place where we hold the policy rate where it is.
Fed Chair Jay Powell. Meme stock traders again piling into shares of GameStop and AMC Entertainment a day after both soared in a revival of the retail frenzy. Right now, GameStop up another 62%. AMC Entertainment up 55%. We'll also throw in Tupperware brands. Tupperware up now by 8.8%. Again, recapping, stocks are mixed. S&P little changed, up now by 1 point. Balance of Power continues. Back we go to Washington. And once again, Joe Matthew.
Charlie Pellet, thank you. Welcome to the Tuesday edition of Balance of Power. It's only Tuesday. Live from Washington on Bloomberg Radio, on the satellite, and on YouTube. You heard all the talk repeatedly on this program about the Rose Garden strategy, right? This is the advantage of incumbency, they say. While the other guys out there campaigning, or in the case of Donald Trump, sitting in court, Joe Biden can use the muscle of the White House and remind people that he can get things done as president on the daily without incurring campaign expenses. Not to go too far with this, that's kind of what's happening today. If you listen to Balance of Power, you knew the tariffs were coming, and they will be rolled out shortly. We're going to bring you to the White House on the schedule at least 10 minutes from now. Yes, in the Rose Garden with President Biden and an eye on China. Laura Davison joins us at the top of the program here with more on this, Bloomberg Politics editor, because this, Laura, is a pretty big moment. It's a big Bloomberg story, the true intersection of business and politics, trade in this case. We're going to talk later with Catherine Tai. What is this White House thinking? Is this messaging, or is this policy that will take hold?
It's a little bit of both. So this is real policy. This is the result of a multi-year review that they've been doing. But when you note at the effects of these tariffs, some of them are tariffing products that are barely even coming in. EVs are the perfect example of a quadrupling of the tariff. Very few Chinese EVs are actually coming into the country, so it'll be a very small effect. But it sends a message, both a political message of to Joe Biden to show that he's being tough on China, in addition to foreshadowing what his policy could be, which is not, sort of what had been, the sort of neoliberalism, free trade, that both Republicans and Democrats agreed on. That it looks like Donald Trump has shifted the window to being, more restrictionist.
For Democrats too, which is really something, isn't it? Joe Biden was a free trade guy, at least at one point. Now he's tacitly endorsing the Trump tariffs. He's not lowering anything. He's just choosing some to increase.
Exactly. And, you see that he's kind of pairing it, putting his own spin on it, saying, look, this is protecting some of the policies that I've passed, things like semiconductors, things like electric vehicles, things like all this new green technology that we want to have made in America. But when you look at, the tone is different on how Trump and Biden talk about it. But if you just look at the substance, they are, on a relatively close page here.
Isn't that something? So now we've got the contest of the economic populists on the campaign trail. Isn't that kind of Donald Trump's lane? Can Joe Biden make that his own brand?
It is Trump's lane, and when you look at, you look at kind of the difference between union workers and union leaderships,
right.
And that's, kind of what's playing out of the
Is
union
that who
leaders.
this is for? Is that the audience here, UAW, Michigan?
It certainly is, and it's also broader too. When you look at some of these Sunbelt states, places like Arizona, Texas, even are getting a lot of these facilities, and you expect that this is a message he can go talk about in some of these swing states. Where I'll note that Biden is not doing particularly well, according to several polls.
Well, including our own, and we've talked about that before, Laura. But it's a message he can take on the trail, right? The fact of the matter is, we're not importing a lot of Chinese EVs. Could I even go buy one right now?
I don't know where you would find one.
Okay.
Certainly not at your local car dealership.
It's kind of a big part of the story, isn't it?
This is, and this is why you saw, so, China came out with a big, big sounding, we don't approve of this.
Right, yeah.
We're going to retaliate. But the expectation is that China won't retaliate all that much because the effect on them is also not that much. But it's sort of, Biden says, look, this is preventing a surge of Chinese EVs from coming into the country. Whether or not that was going to happen is, hard to say at this point. But this really kind of gives him a way to have rebrand what had been an issue that had been a winning issue for Donald Trump.
Sure, whether he can seize on it. It's been time after time we've seen Joe Biden struggle to connect the dots on economic policy. This could be just another, right?
It could be. It's also, worth noting that, we're now 6 months out from an election. A lot of the things that are happening now will be forgotten by Election Day. So he's going to have to keep hitting that.
We're
over
front
and
loading
over
this
again.
pretty early, aren't we? I have to ask, just because you're sitting here, about Donald Trump. Back in court today, he showed up with the Speaker of the House. He showed up with Vivek Ramaswamy, several others who want to be considered for vice president. This is turning into a real circus in New York. To what extent is the campaign controlling who's going to visit him? Do we know?
They do have a lock on who's happening and who's showing up in court. I'll note that this is very calculated and in some ways a very strong show of Trump's control over the Republican Party. He's getting all these people to show up with him, essentially be his mouthpiece. He has a gag order, but Mike Johnson doesn't have a gag order, and Vivek Ramaswamy doesn't have a gag order, so they can say the things that Donald Trump can't, and go after the judge's daughter and the witnesses and other things in this case.
To see the vice presidential contenders show up is kind of a different level, right? We saw Rick Scott, saw J.D. Vance. I guess he's on that list. But for Vivek Ramaswamy to show up in court, is this a box you have to check if you want to be be
It's seemingly
you got to show up
Doug
at the court.
Burgum, also a
Burgum
contender.
was
He's
there,
been
yes.
there.
Top of the list.
I think that if you want a job or you want Trump's protection, like which Mike Johnson needs, he needs the cover from Trump to keep his job. That you need to come and show up for Trump in his time of need in court. Remember that loyalty is the number one thing for Trump. So having him come here and say, "Look, I support this guy," in the face of all the criminal issues, is so important.
If you want protection, that's a nice gavel you got there. It's a shame if something happened to it. Laura Davison, great to see you, as always. Bloomberg Politics editor with us here on Balance of Power as we get things rolling with that important announcement. We'll bring it to you live when it happens, but of course, you know the deal here. If we're on Biden time, that might happen an hour from now. but it's Bloomberg, so whenever he speaks, we'll bring it to you live here on the radio and on YouTube. If you want to watch what's happening either here in the studio or over in the Rose Garden, check us out on YouTube, search Bloomberg Global News. And I do think I may have buried the lead a bit here. Happy primary day. Yeah, it's Tuesday. I know no one's paying attention because we have presumptive nominees, but there are some extremely important primaries that are happening today. One is very close to where I'm sitting, outside the District of Columbia in a little place called Maryland. We're watching Maryland, Nebraska, and West Virginia tonight. Maryland is the one that's going to go a long way to deciding the balance of power on Capitol Hill, namely the Senate. And that's where we have Greg Giroux to help us out. Covering elections for Bloomberg government. Greg, it's great to see you. Happy primary day. I'm glad you could come along here. This was supposed to be a layup for Democrats to replace Ben Cardin in Maryland until the former governor, Larry Hogan, decided to jump in the race. How's this going to work out tonight?
Yeah, it's a very close race, I think, between the top two Democrats seeking this Senate seat, and that's David Trone, representative from a district that runs from Montgomery County near Washington all the way to Western Maryland, and then Angela Also Brooks, who is the county executive in Prince George's County, also near Washington. Two very different political bases for the candidates.
Yep.
And as you mentioned, Larry Hogan, the former governor, entered this race late, kind of a surprise, and turns what should be a sure Democratic retention for the seat of retiring Senator Ben Cardin into one where the Democrats are really going to have to sweat this out because Hogan has won twice statewide in 2014 and 2018. And while Democrats are confident that kind of the laws of political gravity will take effect and that this is going to be a federal election instead of a statewide election, and once they start pinning Hogan to Senate Republican leaders, that they think they'll have the edge. But it's going to be a lot more competitive for Democrats than they anticipated at the beginning of the year.
Well, yeah, as we try to figure out who's going to run against Larry Hogan, it's not lost on us, Greg, boy, the establishment behind Angela Also Brooks, beginning with the governor, Wes Moore. You can add Senator Chris Van Hollen, Steny Hoyer, the former House Majority Leader. Pretty tough to compete with that if you're the Trone campaign here. So who's David Trone's backing? His bank account?
His bank account's a big part of it. He's tapped his substantial personal wealth to the tune of more than $60 million, which makes him one of the biggest self-funding candidates of all time. And that's certainly gone a long way because he's been able to blanket the airwaves with television commercials, emphasizing his support for criminal justice overhaul, curbing opioid addiction. But to your question specifically, he's showing a lot of his own supporters, some county officials, even some from Angela Also Brooks's home county of Prince George's, and some members of the state legislature. So he's touting his own endorsements. But it is really notable, though, that most of the top Maryland Democratic elected officials are siding with Angela Also Brooks here.
Trone, if you haven't been following this, and of course, if you live, and Greg's referring to these ads, if you live in the Washington, D.C. area, you have not been able to hide from it. Every other TV ad is for David Trone because he's loaned his campaign over $54 million. Is he going to set a record whether he wins or loses here, Greg?
He's certainly approaching it. I know that Rick Scott, the Republican senator from Florida, self-funded more than $63 million of his own money when he won his seat in 2018. But then you think Florida is about, 3 times as populous as Maryland. So on a per capita basis, maybe Trone will be the all-time record holder when all is said and done. This is only the primary. Think of how much money he'd have to spend in the general election as well. And that's actually one of the arguments he's making as why he thinks he's the superior candidate, is that the Democratic super PACs and other outside groups wouldn't have to spend in Maryland, presumably, if David Trone were spending his own money there.
It's another race we're following, and it's a congressional primary here, Greg, to replace John Sarbanes. And there's actually kind of a household name, or at least face, who's running here. Harry Dunn is a former Capitol police officer and very closely associated with the events of January 6th. State Senator Sarah Elfreth has the support of AIPAC, the super PAC. How are you reading this?
Yeah, you have more than 20 Democrats on the ballot in this race, which really, I think, underscores the kind of pent-up demand for open congressional seats when incumbents aren't defending them. In this case, John Sarbanes retiring after a long career representing an area near in the Baltimore area. And as you mentioned, Harry Dunn, defended the Capitol during the January 6th, 2021 riots, and is trying to parlay that into a political career serving in Congress. Has raised an enormous amount of money, over $4.5 million. And it looks like his top competitor is going to be State Senator Sarah Elfreth, who was the youngest woman elected to the state Senate when she won her seat there. So I think those two are probably the top candidates, and whoever wins that decidedly Democratic district will be favored to succeed Sarbanes in the Congress.
It's going to be an interesting storyline. Harry Dunn has had certainly his share of drama to deal with. West Virginia, I don't know if there's much to talk about here. Jim Justice just rides off to a win. What do you see, Greg?
Yeah, he's certainly favored in that primary tonight over Representative Alex Mooney. Jim Justice, the governor, got an early endorsement from Donald Trump, got early backing from the Republican establishment. He's the favored candidate of Senate Republican leader Mitch McConnell. And yeah, I think he will win that primary tonight. And with Democratic Senator Joe Manchin retiring, this is going to be a very easy pickup for Republicans in the fall. They need a net gain of 2 seats to clinch a majority in the Senate. They could do it with 1 and the presidency. And basically the 51 to 49 Senate in favor of Democrats right now, with West Virginia going to the Republicans. It basically starts out this big Senate dogfight at a 50-50 tie.
This is amazing. So Justice is a shoo-in, right? It's not even really a contest. We just have to go through the motions, it sounds like. Nebraska is our third state, Greg Giroux. Representative Don Bacon getting a primary from his right. What should we expect there?
Yeah, I think it's a race to watch tonight, if only because Don Bacon has an image on Capitol of being kind of a more center-right, bipartisan-minded Republican. He's been critical of the tactics and views of the hard-right Freedom Caucus on Capitol Hill. That's been frustrating to a lot of the House Republican leadership. So very much an ally of the leadership. He's also one of the fewer than 20 Republicans representing a district that voted for a Republican, one of fewer than 20 Republicans from districts that voted for Joe Biden in 2020. So very much a swing district that would be very much, it will be in play if Don Bacon wins tonight, because he had a close race in 2022. But it'd be, I think, tougher for Republicans to hold if he were to somehow be ousted in the primary. He faces a more conservative primary challenger in Dan Fry. He's kind of underfunded, but there is, it's certainly a race to watch, I think, with what's going on in the House Republican Conference these days.
Getting back to where we started, I only have a minute left here, Greg. The Senate race in Maryland, the most important thing that we'll have our eyes on tonight. Do we have any sense, based on polling, whether Trone or also Brooks could pose a more serious challenge to Larry Hogan?
I think they're both polling about comparably against Hogan in the general election. I think both candidates are making their own arguments as to why they think they would be the stronger general election nominee. Trone in part because of his resources, but also Brooks says that she can, kind of cobble together the diverse coalition that could beat Larry Hogan in a Democratic-leaning state like Maryland in a way that Trone would probably have a tougher time doing. But they're both polling competitively against Larry Hogan. I think Hogan was leading early, but I think that race has really tightened up. And,
Well, we'll be watching it with your help, Greg Giroux. Bloomberg Government. Find him on the terminal and online. This is Bloomberg.
on Wall Street. We do check markets all day long at Bloomberg. Oracle shares now up by 4.4% after the information reported that Elon Musk's XAI artificial intelligence startup is near a deal to rent the company's AI servers. Again, Oracle rallying right now on that word, up by 4.3%. The Dow, the S&P, NASDAQ trading mixed right now. Little changed on the S&P, up by about half a point. Dow Industrials also little change, down 4 points. And we've got NASDAQ up 31, up 0.2%. Spot gold higher by $13 the ounce, up 0.6%. Crude oil down 1.7%. 10-year yield 4.46%. The 2-year 4.83%. Bitcoin today now lower by 2.5%. Bitcoin 61,467. Home Depot's string of negative sales extended into a 6th straight quarter as the big box retailer struggles to overcome a weak housing market and lower demand for big-ticket items. Home Depot shares down now by 0.8%. Rival Lowe's, which does report just about a week from today. Right now we've got shares of Lowe's. They are trading lower as well, down by 0.8%. News out of Boeing, it delivered 24 commercial jets in April, lowest monthly tally since February of 2022. Boeing up 1.5%. Recapping the Dow, the S&P in the red, the S&P down by half a point. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Hi, Charlie Pellet. Thank you. We'll get back to Charlie a little bit later on. Check on trading, as we always do here on Balance of Power, covering Washington with an eye on Wall Street. Thanks for being with us on the Tuesday edition. As we wait to hear from President Biden, I will mention that right now, the Rose Garden strategy in full effect. If you're with us on YouTube, you can see the Rose Garden. The podium is set. The crowd is in place. Reporters have been brought into the Rose Garden, and we're going to be hearing from Joe Biden. Might be brief remarks. We'll find out together on his plans to hike tariffs on Chinese imports, the 4-fold increase on China EVs that we've been talking about on this program, among other things, solar cells, semiconductors, all part of this. And when the president speaks, as you would expect, you'll be hearing him live and unfiltered here on Bloomberg. Introducing the Speaker of the Courthouse, Mike Johnson. Yeah, not in Washington today, but in Lower Manhattan, at the courthouse to be with Donald Trump. And he wasn't alone. Vivek made the trip. So did Doug Burgum and other contestants from the Veep Stakes. As we now have a new venue to kiss the ring and act as a surrogate for Donald Trump. They don't have gag orders. And that's where we start our conversation with Wendy Benjaminson, Bloomberg Washington senior editor, who is forever entertained by what's going on in Lower Manhattan, if I could use that term. I mean, this is really turning into show business, isn't it?
It's really incredible. We thought, when he was interviewing Veep prospects in Bedford, New Jersey in 2016, that was weird enough. Remember the photo with Romney, who,
they'd stand outside the door. And
certainly not the vice president.
That's for sure.
But this is like the trial itself, completely unprecedented in political theater. Yeah. What you have is all the people who want to be vice president, or who Trump has suggested might be his vice presidential running mate. And even some other Republican senators like Tommy Tuberville and some of the others. Yeah. And House Speaker Mike Johnson, the second in line to the presidency, is outside the courthouse doing what Donald Trump can't do, which is call this a witch hunt, call it unfair, call it all that. He has this gag order with a day or two in Rikers hanging over him, so he's actually obeying the gag order this time. And so he's called up all these loyalists to come and
something.
Call it. Is
this an invite, a by invite only thing? Like, do you wait to hear from the campaign, or do you just go to Lower Manhattan?
No, I think they're like deadheads. I think they're showing up.
Yeah,
they're just,
That says a lot.
Yeah.
Look, maybe this isn't the right question to ask, because I know no one's breaking any rules here.
No.
But isn't this a form of witness intimidation?
Sure.
To have senior senators and the Speaker of the House show up to kind of stare down
Absolutely.
the prosecution in this case? I don't know if that's...
Well, not only only are they staring down the prosecution, right in the middle of Michael Cohen's testimony today, where he was revealing how that Trump reviewed and signed off on the plan to pay Stormy Daniels the $130,000 in hush money, that that all of them walked into the courtroom at the same time. There was like the doors swung open, and in comes Vivek Ramaswamy and Mike Johnson and all of this stuff.
I thought the People's Court theme was going to start. It was like very dramatic.
And good for Michael Cohen. He just maintained his composure. But had they disrupted the courtroom, I think then Juan Merchant, the judge, might have said something to them. But as it was, he just kind of gave them a little side eye, and they sat down quietly. Right. But they were there to say to Michael Cohen, we're here and we're watching you. And
well, sure, yeah.
Some
of the most powerful elected officials in the country. As we spend time with Wendy Benjaminson waiting for Joe Biden, we did get our 2-minute warning here for the president to be speaking, and we'll be hearing from him in just a moment. Wendy, you've spoken about the Rose Garden strategy. This is the president, also the candidate we're going to be hearing from.
That's right. That's right. This is using the imprimatur of his office to push his policies, like these new China tariffs on green energy. And I see everyone standing up there in the Rose Garden, so he must be coming out.
It's time to go. He is absolutely making his way out here toward the podium, and we're going to bring you his remarks, of course, live here on Bloomberg. Wendy Benjaminson, thank you, as always. Bloomberg Washington senior editor with us on Balance of Power. I'm Joe Matthew. As we wait to hear from the president, we'll have analysis from our panel on the other side and a conversation with Gene Sperling, the president's economic advisor. Let's listen live on Bloomberg.
President Biden's announcement today is critical to the success of my company and the strength of our economic and national security. From electric vehicles to missiles, aluminum is a key component in most aspects of our modern economy and critical to our national defense. Tripling tariffs on aluminum from China, which continues to build up overcapacity and engage in non-market actions, will allow our business and our workers to compete. Our workers are highly skilled, productive, and committed, and I'm very proud of the strong partnership that we have with the United Steelworkers. We all benefit.
All right, as we stand by to hear from the president, just want to let that breathe for 1 minute. The president will add details to this whole story in just a moment. Right there, we're hearing from an executive, a stakeholder, as they might say, at the White House from Century Aluminum Company, Jesse Gary. This is something that's going to take form on the campaign trail, Wendy Benjaminson, in a way that Donald Trump has already brought to life. Can Joe Biden do that, or is this Trump's lane?
It's a little interesting the way he is doing this. Trump, the difference, though, is that Biden's tariffs are targeted toward a policy that he wants to encourage, which is green energy, electric vehicles, and American manufacturing. That's what the whole Inflation Reduction Act was. When Trump imposed broad tariffs on all Chinese goods, it was more of a let's just get China. It was his... no pun intended, it was his bull in a china shop, approach to things. It's just let's put a tariff on everything. Biden is trying to embrace the parts of that work, and it'll be interesting to see, though, the conflict there is that it does nothing for inflation, which is the issue that we keep hearing over and over again.
So this really is a messaging.
It is messaging.
Then it's not a policy that's going to improve people's lives. We were speaking earlier. I can't go buy a Chinese
if you're building
EV,
an
can
EV, no, you won't be able to. And if you're building EVs, it could improve your life, your paycheck, and all of that sort of thing. But if the rest of us are trying to buy one, no, it's going to make things more expensive.
Remember how upset the UAW rank and file were about the EV mandates, some of the incentives that were in the IRA.
So this is kind of a nod to get Union Joe back.
Well, it is a nod, but is anybody buying that?
I don't know. We're going to have to see how today plays out and how it plays out over the next few days.
So we look at the images of the president in the Rose Garden today. Is the audience actually in Michigan?
Yes, absolutely. Michigan, Wisconsin, all the places where these things are made, where solar panels are manufactured, and to the customers of those. Again, however, it will make things more expensive, and therefore it puts some of that green energy products out of reach of the average Americans who Joe Biden is always championing, and it doesn't do anything for inflation. So it's like, it's the whack-a-mole approach to the economy, right? He's trying to fix one thing and then something else pops up, and then he'll try something else.
At the podium right now, the International VP at Large for the Steelworkers Union, preparing to introduce the president. This gets back to what we're talking about, and his stand on the Nippon Steel deal, the U.S. Steel deal, speaks directly to this factor. It's just a question of whether anyone's listening. Wendy, Are people watching the news enough? Are they going to remember all this in November?
Well, we don't know. What they will remember is how they feel about the economy. Yep. And if you recall, our last Bloomberg News Morning Consult poll showed that people are deeply pessimistic about the economy. So while, like I said, while he's trying to fix one problem, another problem's arriving, and over it all is inflation, which we saw today with the PPI is not coming down, producer price index, it's not coming down. It is persistent. Powell, the Fed chairman, is urging patience, and yet, you know, the prices are still up, and that's all the voters see.
Well, I couldn't help but notice the Bloomberg Morning Consult poll mentioned in the playbook this morning, the Politico playbook, which everyone starts their day with. Just a day after Siena had its very similar swing state poll show the same playing field for Joe Biden. And it's getting worse, Wendy.
It is getting worse. And that's why he is out there this week. After this, he has a number of events later in the week that target voters of color. He is going to Atlanta for a fundraiser. He's giving the commencement address at Morehouse. And
we're going to hear him right now, as a matter of fact, as he reaches the podium. Wendy Benjaminson once again. Here's Joe Biden live on Bloomberg.
I assume you're standing in case you have to run when the rain starts. Please have a seat. Rox, thank you very much for all you do to fight for American steelworkers. I mean that sincerely. And I want to recognize all the labor unions here today, including steelworkers, auto workers, sheet metal workers, AFL-CIO, IBEW, communications workers, boilermakers, machinists. I'm proud, as Rock said, to be labeled the most pro-union president in American history. You heard me say it before. Wall Street's important, a lot of good folks there, but they didn't build America. The middle class built America, and unions built the middle class. Folks, leaders from key American industries are here as well, including steel, aluminum, solar, semiconductors, automakers. And members of my cabinet are here as well. Janet Yellen, the front row is Murderer's Row here. Treasury Department, Julie Su, our of Labor, Catherine Tai, our nation's trade representative, and outstanding members of Congress as well. From Michigan, Debbie Stabenow is here. Debbie, welcome. And Haley Stevens is here. No, I guess there you are. You did make it. They told me you might not be able to make it. I'm sorry. All right. And Congresswoman Debbie Dingell. Again, you smile, Debbie. It's okay. Lisa Slotkin. Well, you should be. You're responsible for a lot of this. Thank you for joining us as I announce a series of actions to make sure American workers and American business and corporations can compete and win in the industries of the future, because that's what this is about. The fact is, American workers can outwork and outcompete anyone as long as the competition is fair. But for too long, it hasn't been fair. For years, the Chinese government has poured state money into Chinese companies across a whole range of industries: steel and aluminum, semiconductors, electric vehicles, solar panels, the industries of the future, and even critical health equipment like gloves and masks. China heavily subsidized all these products, pushing Chinese companies to produce far more than the rest of the world can absorb, and then dumping the excess products onto the market at unfairly low prices, driving other manufacturers around the world out of business. You know, I won't go into it, but we were talking today about how many aluminum plants there used to be and how many there are now. The price is unfairly low because Chinese companies don't need to worry about a profit, because the Chinese government subsidizes them and subsidizes them heavily. And the Chinese relies on other anti-competitive tactics as well, like forcing American companies to transfer their technology in order to do business in China. I spent a lot of time with Xi Jinping. Early on, I told him, he said, why am I being unfair with China? Not unfair. I said, look, we'll play by the same rules if you want. If you want to do business in China, you got to have a 51% Chinese owner. You got to provide access to all your intellectual property, etc. You want to do that in America? With silence. Sometimes they just outright steal through cyber espionage and other means. and it's been well documented and internationally recognized. And when you make tactics like these, you're not competing. It's not competition, it's cheating. And we've seen damage here in America. To name one example, back in 2000, when cheap steel from China began to flood the market, U.S. steel towns across Pennsylvania and Ohio were hit hard. And any of you from those areas know well. More than 1,800 iron workers and steel workers in Pennsylvania and Ohio lost their jobs. I'm not going to let that happen again. That's why today I'm announcing new tariffs in key sectors of the economy that are going to ensure that our workers are not held back by unfair trade practices. They include, the thing I'm announcing today, 25% tariff on Chinese steel and aluminum products, and we'll counter China's overcapacity in these industries. And we're making major investments in clean American steel and aluminum. Clean American steel and aluminum. It's a big deal. Clean because of the way we manufacture it here. It emits half as much carbon as steel made in China. Last month, my administration announced the largest investment in clean manufacturing in all of history, up to $1.5 billion in 6 clean steel projects across America, creating and supporting thousands of union jobs. Next, a 100% tariff on electric vehicles made in China. People say, wow. Because we're not going to let China flood our market, making it impossible for American auto manufacturers to compete fairly. We're also implementing a 25% tariff on electric vehicle batteries from China and a 25% tariff on critical minerals that make those batteries. Folks, look, I'm determined that the future of electric vehicles will be made in America by union workers, period. And we'll do it by following international trade laws to do it. American companies are investing tens of billions of dollars in electric vehicles and batteries. And thanks to my bipartisan infrastructure law, we're building a network of 500,000 charging stations all across America, creating thousands of IBEW jobs across America. Electric charging stations. The reason to do this is simple. Electric charging stations have to be as easy to find as a gas station. And that's what this will be. You're not going to have to worry about it taking off, and you're not going to be able to make it all across the country without having to figure something else out. Our partners around the world are making similar investments. They also want supply chain for electric vehicles that isn't dominated by unfair trade practices from China. America can continue to buy, Americans, I want to make this clear, notwithstanding what the other guy's saying, can buy any kind of car they want, whether it's gas, electric, or hybrid. But we're never going to allow China to unfairly control the market for these cars, period. Next, we're going to raise tariffs on Chinese solar panels from 25 to 50%. Here again, because the Chinese government is subsidizing excess capacity, they're flooding the market. They're driving manufacturing companies out of business in Europe. But we won't let that happen here in America. We're putting a 50% tariff on semiconductors made in China. These are those tiny computer, all of you know this, but for the public, those little tiny computer chips, smaller than the fingertip, that power everyday lives. Everything from smartphones, to automobiles, to dishwashers, satellites. Look, America invented these chips, but over time we stopped making them. We invested overseas. Now, thanks to my Chips and Science Act, one of the most significant investments ever in science and technology, we're bringing this vital industry back home where it started, in the United States of America. And finally, we're putting tariffs on health equipment like masks and gloves that nurses and doctors wear every single day. The pandemic taught us anything we need to have a secure supply of essential supplies here at home. Folks, these key sectors, my administration is combining investments in America with tariffs that are strategic and targeted. It's a smart approach. Compare that to what the prior administration did. My predecessor promised to increase American exports and boost manufacturing, but he did neither. He failed. He signed a trade deal with China. They were supposed to buy $200 billion more in American goods. Instead, China imports from America barely budged. And now Trump and the MAGA Republicans want across-the-board tariffs on all imports from all countries if reelected. Well, that would drive up costs for families on an average of $1,500 per year each year. It simply doesn't get it. For years, I've heard many Republicans, even Democratic friends, say China's not on the rise. China is on the rise. America's falling behind. I've always believed they got it wrong. America's rising. We have the best economy in the world, and since I've come to office, the GDP is up, our trade deficit with China is down to the lowest level in over a decade, and we're standing up against Chinese government unfair economic practices now. At the same time, we're standing up for peace and stability across the Taiwan Straits. I revitalized our partnerships with the Pacific allies and India, Australia, Japan, South Korea, the Philippines, Pacific Island nations. I've made sure the most advanced American technologies we develop or invent can't be used by the Chinese government to undermine our national security. Frankly, before it rains, for all this tough talk on China, it never occurred to my predecessor to do any of that. Bottom line, I want fair competition with China, not conflict, and we're in a stronger position to win that economic competition in the 21st century against China than anyone else because we're investing in America again, in American workers. Let me close with this. I come from Scranton, a town like a lot of working class, middle class neighborhoods all across America. Like Racine, Wisconsin, which I visited last week. Once a manufacturing boom town until trickle-down economics came along and the middle class in Racine got hollowed out. 6 years ago, my predecessor showed up carrying a golden shovel, promising, thanks to his new $10 billion manufacturing complex, would be built in Racine. He said it would be the eighth wonder of the world. Big promises that never came true. He used that golden shovel to dig a hole, and then he fell into it. Well, it's not on that's part of well, I'm delivering for Racine. Thanks to the investment of my administration, Microsoft is investing billions to build a new data center in Racine, creating thousands of good-paying jobs. Because the view from Scranton and towns like it are a lot different than from Mar-a-Lago. It's a view where that money doesn't determine your worth. Everyone's entitled to be treated with dignity and respect, and everyone deserves a fair shot. We leave nobody behind. That's the America we're building together. That's why I've never been more optimistic about our future, and I'm really going fast because of the rain. That's why we have to remember who we are. We're the United States of America. And there's nothing beyond our capacity when we do it together. God bless you all, and better get out of the rain. Thank you very, very much. Thank you. Oh, we got
Live remarks from President Biden, saved by the rain in the Rose Garden. I'd like to just make sure we don't get any questions there, and it appears that Mother Nature is keeping that from happening. With the widely anticipated announcement on hiking Chinese tariffs, at least some of them, namely EVs, up fourfold as we've been reporting. Bloomberg had this story for you a couple of days ago, so if you're with us on Balance of Power, none of this should really have been a surprise. We're going to be speaking a little bit later on with Gene Sperling, the president's economic advisor, and with our panel, Rick Davis and Jeannie Shanzano. Let's first get up to date on Wall Street, see how the markets are churning today. Charlie Pellet's got an eye on it for us in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Indeed, churn, the appropriate word right now. Little change. Do want to focus on the EV makers after the tariff announcement that you heard live here on Bloomberg Radio. Tesla shares, they're up now by 3.3%. Rivian Automotive shares among the U.S.-based EV manufacturers up now by 3.9%. We are looking at a mixed U.S. stock market. The Dow, the S&P, they are both lower. The key takeaway, little change right now. Let's call the S&P unchanged on the day. The Dow right now lower by 20, drop there of less than 0.1%. NASDAQ up 27, a gain of 0.2%. 10-year, 4.45%. The 2-year that's yielding 4.82%. Spot gold up 0.7%. 23.52 the ounce, while West Texas Intermediate crude oil is down 1.4%. WTI 77.98 a barrel. Cannot ignore hydrogen producer Plug Power surging after the Biden administration offered the U.S. company a conditional commitment for $1.66 billion in loan guarantees. Right now, we've got Plug Power surging 28%. Again, recapping, stocks are trading mixed. The Dow, the S&P in the red, NASDAQ higher. S&P now lower by 1 point. Balance of Power continues now. Back we go to Washington. Once again, your host, Joe Matthew.
Charlie Pellet, thank you. We'll keep tabs on the markets for you throughout the broadcast as always, with potentially market-moving news. Just now from the White House, as you heard live here and saw live on Bloomberg, the president announcing the new tariffs on an additional $18 billion of Chinese imports, the announcement from the Rose Garden. With EVs in focus here, the rate increasing fourfold, as Bloomberg reported 2 days ago, 25% to 100. You've got lithium-ion EV batteries on here, solar panels doubling to 50%, tariffs on semiconductors doubling to 50% as well, all in effect by the year 2025. We're lucky to have the insight of Gene Sperling, the senior economic advisor to the president, who has advised many presidents on the economy, and he joins us now live here on Bloomberg. Gene, it's great to have you back. We just heard the president's remarks. Our listeners and viewers had a chance to listen and watch live. Is Joe Biden not a free markets guy anymore?
The president is a fair competition markets guy. That applies to how he looks at domestic market competition. He wants fair competition. That same principle applies internationally. We want nothing more than for countries like China, particularly China, to be a fair competitor where we are all playing by the same rules. We all know what happens, though, with China's economic strategy. They decide that instead of dealing with their own demand internally, that they're going to grow by exporting at all costs. And what that really means is exporting at unrealistically, overly subsidized costs that help their export numbers at the expense of American workers and American industry. And we've seen this movie before. We don't want to see it again. Now, the president is not coming at this just with a tariff approach. You know, from the campaign when he had his Build Back Better strategy, there's been a focus exactly on this, the strategic manufacturing jobs and industries of the future, ensuring that we both have a strategy to encourage investment. And it is remarkable to see over $800 billion of new private sector investment coming in these critical sectors. But we know what could throw that off is to be flooded with Chinese imports on those same areas. So this is a very strategic hit, but it is one that is designed to ensure and encourage and fair competition and make clear you're not going to do this incredible over-subsidization, at times trying to create more products than exist than there is demand in the whole world, and to do stuff that is so below market cost that it is your effort to grow at our expense.
Okay, you just said a lot there, Gene. I'm just trying to get a sense of what's motivating the president here, having seen the surgical approach on certain items as opposed to the across-the-board approach that we saw from the Trump administration. And I know that the administration has been trying to highlight that difference. But we didn't see anything go down. Right. And having seen all of the Trump tariffs remain in place, it sounds like he was on the right track.
There just couldn't be a greater difference. First of all, let's even just look at the results. Our trade deficit with China is right now the lowest it's been in a decade, lower than any of the 4 years under the previous administration. There was no strategy on to actually revive a semiconductor industry in the United States to compete for electric vehicle jobs or electric batteries. No strategy at all. Now what you've seen is the most aggressive legislation that is widely praised by the U.S. private sector and labor as well for encouraging more jobs here. So the president, as part of that integrated strategy that he has been working on every day since he's been here, is saying, we know what could disrupt our effort to increase supply and to make sure our companies have a chance to compete fairly and to sell our products domestically and externally, is for China to engage, as they continue have in over-subsidization of key manufacturing sectors. This is not just our opinion. This is Europe's opinion. It is the opinion of even other major of the BRICS, others, well, you know which ones, that would that China is not playing by the rules and that they're seeking to export their way out of their challenges at the expense of others. So this is really part of that strategy. Now, going across the board in areas that are not essential, where we're not trying to build supply, where they could actually hurt production here or hurt families, is not part of that kind of strategic approach. And if we had done nothing till now, if there'd been no CHIPS Act, if there'd been no infrastructure bill, if there'd been no IRA bill to encourage electric vehicles and green manufacturing here, you could say, oh my God, this is just a one-part, you know, off-the-cuff trade strategy. It's not. This has been part of an integrated strategy that has shown we can induce the private sector to create supply and manufacturing here. And manufacturing, as we know, punches above its weight in terms of private sector R&D, innovation, patents, and the spread of suppliers and strong supply chain that we saw how much we were hurt by not having during the pandemic, and we are not going to let be disrupted with unfair trade practices from China. If they want to play by the rules, bring it on. Let's compete.
Okay. I want to talk about briefly our relationship with China and the reaction. Gene Sperling, the president, said just now in the Rose Garden that China imports of U.S. goods, to your point on the trade balance, barely budged under the trade deal. But I see now the reaction from Beijing resolutely opposes the president's decision, sees the move as political manipulation. What's the drama for then if we weren't buying China EVs to begin with? And what does this mean for our relationship?
Well, I think it's very clear, and the president's been very clear, we're not trying to provoke a trade war. We're not trying to hurt relations. We're trying to have a sustainable, fair relationship where nobody seeks to strengthen their economy through unfair trade practices at the expense of others. But it really, you know, we're not talking about a situation of little differences in small products. We're talking about almost a global consensus that China still operates on a model where they over-subsidize products to the extent sometimes where they have more capacity than there is global demand. At that point, you just have an organized strategic effort to flood the market with cheap goods that undercut those who are trying to play by the rules, who can't possibly compete because their costs are so low, not because of innovation, not because they actually have lower costs, but because of excessive market subsidization. So the president is, by having a targeted strategy, making clear this is not just an across-the-board slap at your face that would also hurt American consumers and raise their prices. We are looking at the areas in electric vehicles, in semiconductors, in electric batteries, where we have invested in strong supply and a strong supply chain in the United States and are seeking to have an industry that can compete long into the future, where both sides are playing realistically with what their costs are going forward. So I think it sends a strong message. It lets them know the areas where they need to play by the rules, or at least understand that we've seen this movie before of them crushing American communities and jobs with unfair subsidies, and we're not going to just watch that movie again. You have a president who's going to take strong action. This is part of a comprehensive strategy he's had for American manufacturing revival. The private sector has bought in, labor has bought in, the American public has bought in. We're not going to sit by and let it be disrupted by China. If they want to play by the rules and have fair competition, then what the president is saying is bring it on, let's have that.
Bring it on, says Gene Sperling. Gene, I'm glad you could join us today, and I appreciate that, having heard from the president on tariffs and now his economic advisor with the Griffith Observatory at his back. That's why you should be on YouTube. Gene, thank you. We're going to play this to the panel. Next hour, we'll have Rick Davis and Jeannie Shanzano with us. Also, June Grasso from Bloomberg Law and Congressman Brad Sherman, the Democrat from California, will join with a lot more to talk about here on the fastest show in politics. This is Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Will the Veep stakes be won at the courthouse? Welcome to the fastest show in politics. As Donald Trump's court entourage today includes several Veep contenders and the Speaker of the House. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, this all as Michael Cohen takes the stand again today. High drama in Lower Manhattan.
Yeah, second day of testimony. Court right now is on the lunch break, but when we come back this afternoon, we could very well see the beginning of cross-examination, which is certain to bring no shortage of fireworks as the defense gets a chance to question Cohen. But as you say, Joe, quite the audience. All of Michael Cohen and the prosecutors and the defense are getting today, with not just House Speaker Mike Johnson, but Governor of North Dakota Doug Burgum, Florida Congressman Byron Donalds, and former presidential candidate Vivek Ramaswamy.
Vivek made it there too.
Yeah.
This could be like a smashing episode of The Apprentice. Let's just pick someone in the courthouse. I'm wondering if it comes to that. We'll talk to June Grasso momentarily from Bloomberg Law. She's got her eyes on this for us.
Indeed. We have a lot to cover today, not just in domestic politics, but geopolitics as well. As you have the Secretary of State Antony Blinken in Kyiv talking about Ukraine and ongoing questions about what comes next in Israel and its war with Hamas. We'll have more with Mara Rudman, a former State Department official who's now at the University of Virginia. First, though, as always, let's get a check on the markets. Charlie Pellet has that for us up in New York. Hey, Charlie.
And good day from New York. Indeed, lots of moving parts in the markets today. Meme stocks are back. We'll get to how they're performing in a moment. But right now, S&P 500 index lower, little change, down a point right now, down less than 0.1%. Stocks essentially on hold ahead of the CPI report tomorrow morning. Complete coverage on Bloomberg Television and Radio, 8:30 a.m. Wall Street time. So the S&P at 5220 right now. We have got the Dow Jones Industrial Average trading lower. The Dow down by 39 points, decline there of just under 0.1%. We've got NASDAQ up 32, higher by about 0.2%. 10-year 4.45%, with a 2-year that's now yielding 4.82%. Spot gold up $18 the ounce, up another 0.8%. 23.54 right now on spot gold, and West Texas Intermediate crude down 1.2%, 78.16 for a barrel of WTI. Meme stock traders once again piling into shares of GameStop and AMC Entertainment a day after both soared in a revival of the retail frenzy. GameStop up another 36% today, AMC up by 23%, and Tupperware also moving today. We've got Tupperware up by 8.8%. Again, recapping, little movement for the U.S. stock market today, unchanged on the S&P 500 index. The Dow lower by 27, NASDAQ up 35. Back we go to Washington. Balance of power continues, and once again, your hosts, Joe Matthew and Kaylee Limes.
All right, Charlie Pellet up in New York. Thank you so much. Joe and I indeed are here in Washington, but really it's where New York is the center of the action. And it has been for the last almost month, as Donald Trump has been on criminal trial in this hush money case that continues today. But we could be nearing the end game here as the prosecution's getting ready to finish up its questioning of Michael Cohen, his former attorney and fixer.
Yeah, the cross will be the news, is what we're expecting here. Obviously, he hasn't said anything yet that we haven't really heard before. But yeah, to your point, I thought lawmakers were coming back to town today. The Speaker of the House is at the courthouse, along with several contenders for vice president. And we want to get into this with June Grasso, of course, the host of Bloomberg Law, who has a beautiful distillation every evening, 6 p.m. Eastern time on Bloomberg Radio, about everything that happened over the course of the day. June, it's great to have you back from World Headquarters in New York. Is there any component of potential witness intimidation here? I realize anybody can come to the courthouse, right? But when you have some of the highest ranking elected officials, we saw Senator Rick Scott there today, the Speaker of the House. What's the testimony supposed to key off of here? What does Michael Cohen think when he looks up and sees all these people?
Well, I'll tell you one thing that happened after the mid-morning break. By the way, the Speaker was down there, I think, for about 45 minutes and left. But Michael Cohen, after the mid-morning break, was in the middle of his testimony, and according to our reporters who were there, a number of these Republican leaders walked into the courtroom at the time when Michael Cohen was testifying, so late, and they walked right down the middle of the court aisle and went to their seat.
That's right.
You know, it is a little bit intimidating, I think, for witnesses who are on the stand. Now, Michael Cohen may be used to it, but other witnesses it would be intimidating for. Another interesting thing is the gag order. You know, these lawmakers came because Donald Trump is looking to have, his family's not there, one of his sons is there on and off, but is looking to have this support from his backers. But did he tell them anything? Did he tell them anything about what to say about the witnesses? If so, that's a violation of the gag order technically. So, I mean, there are a lot of, it's very unusual, and if the jurors know who they are, I wonder how they view this. Maybe not in the way that Donald Trump wants them to view it as, oh, this is support, but more as, oh, this is intimidation and what's going on here. It's really unusual.
Well, it's an interesting point on the gag order, Jude, because of course that bars Trump from speaking about certain witnesses, including Michael Cohen, but also members of the judge's family, including his daughter. And the House Speaker, Mike Johnson, specifically called out Judge Merchan's daughter and her ties to Democratic fundraising today, which I thought was interesting. When it comes to the actual testimony, though, that we are hearing from Michael Cohen and the questions we have gotten from the prosecution, to what extent is their line of questioning today basically trying to set up to hedge against what could come in the cross-examination when the defense gets its turn?
Well, that's how they ended the direct examination. The last thing they did was go through, Michael Cohen's various convictions and the lies that he told to banks and Congress, et cetera. And the final question was one of those, do you regret this? And apparently his voice choked up and he talked about regretting all he'd done and he lost his moral compass, and they ended on that. So they did try to sort of what they call it, take the sting out of what's definitely coming up on the cross-examination. But, he is a troublesome, really flawed star witness, because he not only is saying that, he lied about at the times before Congress, but he's also on the stand saying, and they're asking him, what about this document? Is that false? Yes. Did you lie about that? Yes. So his testimony itself is filled with, I lied, but now you believe me. And so the prosecution is hoping that the backup that they have with the documents is going to make the jury comfortable believing him. I think one of the best documents they've had so far was introduced yesterday afternoon, and it was a slip from the bank saying that he had paid the $130,000 to Stormy Daniels' lawyer, and there was handwriting on it from Weisselberg, the CFO, and it was the formula for how he was going to be paid. And the interesting thing was that it took account for the fact that, and this is a little mathematical, I'm not going to get too mathematical, but if this is a payment for his services, then it would be taxed. If it was a payment reimbursement, it wouldn't be taxed. So they figured out what the taxes would be. They added another 50% onto it so that the taxes would be taken care of, and they they grossed it up, is the term that they use. So that's sort of interesting, and I think very supportive of the fact that, Weisselberg did the formula here, and we've heard time and time again that Trump knew, every dime that went out in his company. So I thought that was really good testimony.
All right, June Grosso, the host of Bloomberg Law, breaking down another day of dramatic testimony in the Trump hush money case in New York. The trial, that is. And of course, it's not yet over. They are just on lunch break right now. June, thank you so much. And of course, Joe, well, Donald Trump, as he campaigns for the presidency, wants to be elected in November, of course, has these legal headaches to deal with. President Biden has many headaches as well, not in the legal arena, but certainly in terms of geopolitics, as he has faced a lot of criticism over his handling of Israel and its conflict with Hamas, most recently the decision to withhold sending large bombs to Israel because of concern over how they could be used in Rafah.
Yeah, count the ways. I mean, from geopolitics to border politics to the economy. This is a candidate and a president spinning a lot of plates right now, as we saw him try to employ the Rose Garden strategy earlier, announcing some new tariffs on China. But fascinating to see, they're spinning so many plates that we forget some of them sometimes, Kaylee, as the Secretary of State touches down in Kyiv. With all the shuttle diplomacy throughout the Middle East, Ukraine is in the focus at the White House today.
Yeah, the first time we've seen the secretary there since the actual supplemental aid package passed Congress after months and months of efforts. Finally, Ukraine getting more military assistance it needed from the U.S. The question is, how quickly does it make a difference in that conflict, especially when we're seeing another hot conflict in the Middle East as well? And it's on that note we want to turn now to Mara Rudman. She's the University of Virginia professor at the Miller Center. She's also former State Department Deputy Special Envoy for Middle East Peace and former Deputy National Security Advisor. Professor, thank you so much for being here on Bloomberg Television. television and radio. If we could first begin in the Middle East, as the Prime Minister of Qatar was actually speaking at the Qatar Economic Forum that Bloomberg is helping host earlier today, suggesting that right now ceasefire talks between Israel and Hamas are essentially at a stalemate. If it doesn't happen in the near immediate future, is it ever going to?
Well, yes, the hope will continue and the work must continue on getting to a pause in the fighting, in getting to Israel to focus more strategically on their goals and the best ability to defend themselves, and getting hostages out and humanitarian aid in. These are all the reasons why it's really critical to maximize pressure and focus on getting to a ceasefire agreement.
So with that said, how much would a ceasefire depend on hostages being released, knowing that not everyone believes they are all alive? And we keep hearing reports that Hamas cannot identify the location of all of the hostages with whom they are dealing. How does this play out in the end?
So part of a ceasefire is very much dependent on getting hostages out, and that is sadly at this point, whether it's bodies or whoever is remaining alive. The hostages have obviously been held under horrific circumstances or taken into Gaza under even more horrific circumstances. And it is critical that they be returned, they or sadly their bodies. In terms of what Hamas knows or doesn't know about where they are, that was certainly brought out early in the immediate post-effects of October 7th, given the number of different groups associated with Hamas that had a role in taking those hostages in. I think it has less credibility at this point, since it is so clear that Yahya Sinwar, who is the military commander of Hamas in Gaza, who orchestrated this entire October 7th attack and the aftermath, is a guy who is very much in control. So I think it begs credibility at this point that they don't know exactly where most, if not all, of the hostages are.
It's interesting, and I wonder if any of them may be in Rafah, where more than 1 million Palestinians had sought refuge, and where the U.S. policy is really coming to most direct conflict, perhaps, with what Israel would like to do, is the U.S. would not like to see a major ground invasion of Rafah, and yet Israel is already making incremental moves in that city in particular. The UN has said within the last 24 hours that some 450,000 civilians have already fled Rafah in the last week. Do they have anywhere safe to go? For all of the administration saying we just want to make sure there is a plan in place to protect civilian life in Rafah while Israel is trying to achieve its objectives of eradicating Hamas, getting those last remaining battalions there taken care of. I just wonder if it really is possible for Israel to do both.
Well, Kaylee, the question you raised is a question being raised and it has been continuously raised by the U.S. administration at the most senior levels, and also reportedly by Israel's military leaders, who are increasingly coming out more publicly and questioning the ways in which Prime Minister Netanyahu has been directing this effort. So there's a concern certainly about where the hostages are. It is almost certain that they're in tunnels, that many tunnels that are deep under Gaza. And so whether they're in Rafah or in Khan Yunis, they're almost certainly surrounding and being used as human shields for Yahya Sinwar, the military commander of Hamas, and probably for many other Hamas fighters. To be clear, much of Hamas, the military units, are deep underground in these tunnels. Hamas does not allow the many Palestinian innocents that privilege. In other words, they are using Palestinian innocents very much as fodder in a horrible way. And those folks are all on the ground. And as you say, there are no real safe places in Gaza at this point. And that's part of the point that National Security Advisor Jake Sullivan made really clearly just recently, in saying that the United States has yet to see any kind of credible plan by Israel on how to protect Palestinians above ground in Gaza.
Laura, I know you were in Ukraine just last month, in Kyiv, where the Secretary of State is today. Knowing that the money's been passed, the weapons are on the way, what was the purpose of this visit by Antony Blinken, if not only to send a message to Vladimir Putin?
So, in fact, I think that Secretary Blinken was sending a message both to Vladimir Putin and, frankly, to the people of Ukraine as well. He and President Zelensky have a very good and strong relationship. Ukrainians have been quite concerned about the degree of U.S. continued commitment to their very real fight, to their struggle against Russia, given how long it has taken the United States, frankly, because of skirmishes within the Republican Party in Congress, how long it had taken the United States to get that vitally needed assistance to Ukraine. So I believe what Tony Blinken was doing was sending a message, was in a very real way showing the people of Ukraine, as well as President Zelensky, the degree of U.S. commitment and offering some reassurance, as Jake Sullivan did on his visit back, I believe, in the end of March, that U.S. aid, some of it has arrived, more is coming, and it will very much help Ukraine in the very significant challenges they are facing now from Russia.
And finally, Mara, in our final minute with you, obviously, while the U.S. has provided aid to Ukraine, the U.S. also has put essentially limits on what it would like Ukraine to do with that aid, including not doing anything offensively into Russian territory. For Ukraine to win this war, are we going to have to see a tweak on the margin to administration policy on that front too?
Kayla, I think that's a very good way of describing it in terms of the language you just used about a tweak on the margins. I do think it's important that the United States have the most expansive possible view of allowing Ukraine to fight this fight. The United States is quite fortunate that the United States and Americans are not on the ground having to defend against Russia. We need to make sure that Ukraine has every ability to do so and to prevent the further spread of Russian aggression in Europe.
Mara, it's great to have you, and we appreciate the time today on Balance of Power. Mara Rudman, University of Virginia professor, former State Department Deputy Special Envoy for Middle East Peace, spent a good deal of time in the national security space, and your insights are important to us. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, we have to play this to the panel. We haven't heard from Rick and Jeannie yet, and we have a lot to cover today from both spheres in politics and both ends of Pennsylvania Avenue.
Indeed, and up in New York, where we're seeing the Veep stakes take things on the road all the way to New York City outside the courthouse.
The optics are amazing today, and we'll have more on all of this next with our signature panel on the fastest show in politics. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Stocks on hold ahead of the key CPI report tomorrow morning. S&P right now down 2 points, lower, little changed. We've got the Dow down by 0.1%. The Dow lower now by 52 points, while NASDAQ is up 26, a gain there of 0.2%. Stocks, bonds, and the dollar all seeing small moves ahead of tomorrow morning's inflation data. 10-year right now at 4.45%, with a 2-year that's yielding 4.82%. Spot gold up $16 the ounce, now at $23.52 for gold. That is an advance of about 0.7%. And West Texas Intermediate crude 78 even a barrel. WTI down now by 1.4%. Home Depot's string of negative sales extended into a 6th straight quarter as the big box retailer struggles to overcome a weak housing market and lower demand for big ticket items. Home Depot shares down now by 1%. Rival Lowe's, which reports a week from today, we've got Lowe's down by 1.1%. Cannot ignore those meme stocks in today's trading. Case in point, GameStop surging now by 29.9%, AMC up by 31%. Recapping, most stocks lower, S&P little change, down now by 1 point. Balance of power continues. Back we go to Washington. Once again, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet up in New York, thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where we have had our eyes on New York on the ongoing hush money trial of former President Donald Trump. But we have another legal development that it impacts potentially the current president, or at least his family, specifically his son, Hunter Biden. According to the Associated Press, a judge has rejected Hunter Biden's bid to delay his federal gun trial. That trial is now going to begin, Joe, next month in Delaware. Again, this is the son of the president. It's not the president himself, but still this could be a headache for Joe Biden as he campaigns for re-election. The legal issues certainly do not begin and end with the Republican presumptive nominee.
Well, that's for sure. And obviously the president has had to deal with this more than once, although at the same time we've seen efforts in Congress to try to vilify what they refer to as the Biden crime family kind of fall flat, to the point where it doesn't really appear that the impeachment proceeding or the impeachment inquiry that could lead to a proceeding is underway any longer. There's a lot of gray there right now with James Comer and his oversight committee.
Yeah, so I guess we'll have to wait and see if we get developments out of Congress or any further announcements in regarding impeachment from the House Speaker, Mike Johnson. But he wasn't actually even on Capitol Hill in Washington, D.C. this morning. He was up in New York at the courthouse where Donald Trump is today. And this is what the speaker had to say outside.
I'm an attorney. I'm a former litigator myself. I am disgusted by what is happening here, what is being done here to our entire system of justice overall. The people are losing faith right now in this country, in our institutions.
Let's get into it with our signature panel. Rick Davis and Jeannie Shanzano join us on Balance of Power for their take on this and a few other stories happening today. Great to see both of you here. Rick, these are politically motivated trials, and they are a disgrace, said the Speaker of the House. You can weigh in on the value of this entourage, but I guess the point here is he can say things Donald Trump cannot. Is this a good strategy?
Well, it certainly improves upon the strategy. I mean, when this trial got started, Donald Trump was basically alone in that courtroom, and very few people, his family, coming in every now and then. He started complaining about that, and I think limited himself to what he was starting to say about judges and whatnot, to not trigger any more fines for contempt. So, yeah, now it seems like this is all part of a choreographed campaign to interview vice presidential candidates, to show party unity around Donald Trump, and to undermine the legal process that's going on in New York. I came up today to New York just to see if I could get on the list of VP candidates. And I guess that's probably not going to happen, but the reality is it's going to be crowded up here.
Indeed. Well, of the VP candidates who are at the courthouse alongside Mike Johnson today, we're talking specifically about North Dakota Governor Doug Burgum, Vivek Ramaswamy, a former presidential candidate himself who was running against Trump at one point, and Florida Congressman Byron Donalds, who it's also been floated. But Mike Johnson hasn't, Jeannie. He's not in the running for Veep. Why did he feel the need to go? Rick was just speaking to the strategy here for Donald Trump. What's the strategy for Mike Johnson?
He's got to stay very close to Donald Trump, because that's why he has his job, after all. That's why Donald Trump decided not to support Marjorie Taylor Greene for the moment, in her quest to vacate him. But I have to tell you, I find this all a little depressing and sad for Donald Trump. I mean, you can't get your family there to show you some love when you're facing 34 felony counts, well, except for his son. And so you're getting what? All of these people who are only there because they want to maintain their positions or get their positions. It's very, very strange. And, you know, don't these people have anything else to do besides sit in a New York courtroom all day? The Speaker of the House, sitting senators in the U.S. And, you know, I would think they might be a little careful about calling out a young woman. We've heard Mike Johnson, we've heard J.D. Vance attacking the judge's daughter because she has a job. I mean, folks, look back at what happened to Rudy Giuliani and others when they attacked Ruby Freeman and her daughter. $148 million later, you think they'd be very careful of this, but nothing can get between any of them and Trump, apparently, at this point.
Well, while we're talking about the Veep stakes here, I'm curious to get both of your reaction to what we heard from Ken Griffin, Citadel, of course, talking about the wait to see who wins the Veep stakes. He was asked if he had donated to the campaign yet. Here's what he said.
I have not. Will you? I'm going to wait to see who he picks as his VP candidate.
Is there anyone whom you'd like to see him pick as his VP candidate?
I don't. This is, again, like poking the bear. Not sure which way my recommendation goes in terms of helping that person's prospects.
So he doesn't want to thumb the scale on this one, I guess, Rick, but in a serious world, I don't mean to make you smirk here, but taking a look at those folks who were actually at the courthouse and some of the others who have been to fundraisers in Palm Beach recently, do any of them appeal more to the investment crowd?
Well, for sure. And I think this is what I'm hearing within the Republican donor community from people like Ken Griffin, is I can see toward supporting Donald Trump, those who haven't so far, and there are a lot, if he picks the right vice president. Obviously, Doug Burgum's a good example of that. To a lesser extent, J.D. Vance. I've heard the Virginia governor, Youngkin, mention many times like how much more comfortable we would be if he had someone like Youngkin on his VP selection. So I do think those kind of folks matter, and I think that's an advantage for Tim Scott. You know, he's a ranking leader on the Banking Committee in the United States Senate. He's had a lot of support from Wall Street and the investment community. And so I think these things are going to matter to that group as to whether or not they put their thumb on the scale, as you say. And look, I mean, you know, somebody like Ken Griffin, he's already given $60 million this cycle. I mean, like, he can really make a difference if they get the right candidate on that ticket.
Well, and where Ken Griffin is putting a lot of his money after he initially had donated to Nikki Haley, obviously hasn't donated to Donald Trump yet, is down ballot races. Jeannie, in fact, that's where a lot of mega donors have shifted their focus, who have been reluctant to support Donald Trump, including the Koch network, for example, which was also backing Nikki Haley, now is looking down ballot. And on that note, we do have a pretty important primary that could help decide the composition of the United States Senate, potentially in Maryland. Larry Hogan, the very popular former governor of Maryland, the Republican, is going to be up against either David Trone or Angela Alsobrooks, depending on who wins that Democratic primary today. Could potentially, Jeannie, the Democrat, decide whether or not Republicans flip that seat, and Larry Hogan could get a seat for Maryland, add West Virginia to that? The Senate's gone, right?
It absolutely is. And of course, Larry Hogan, incredibly popular, and interestingly, not somebody who would probably be visiting the trial with Donald Trump, because he has been a big Trump critic. But I think we are seeing in some of these down ballot races, unlike in the last midterm, Republicans are willing to go with and choose candidates who have a better shot of winning, not just because of their fealty to Donald Trump. And Larry Hogan's a perfect example of that. You know, on the Democratic side, it's a fascinating primary because Alsobrooks has the support of basically the establishment in Maryland up and down the ballot. But, you know, Trone has spent so much money, as I'm sure you know, Kaylee, living in that area. You can't go to the DC, Virginia, Maryland area and not see his ads. And so it's going to be interesting to see where Democrats go on that. Does the establishment win? You know, you've got, you know, a woman with a lot of support in that area, and you've got somebody who can spend his own money and basically making the case. Do you want to be, you know, spend the party's money? We need it elsewhere. Let me spend mine. And so it's going to be fascinating to see what happens tonight.
Well, so Rick Davis, what is worth more? The endorsements of Wes Moore, Senator Chris Van Hollen, Steny Hoyer, or $60 million in your personal bank account?
We're going to find out tonight, because that's exactly what we're looking at in that Democratic primary. But I hate to burst their bubble. All of that may be for naught, because when I see the current polling, Larry Hogan is crushing him, almost a 20-point race. And I know that the popular thing is to say, oh, well, you know, people vote differently for governor than they do for the Senate. And generally speaking, I'd say that's probably the case. And they'd have to be very different in this case. But Larry Hogan left office with a 77% approval rating. Let's not underestimate the fact that it almost, if you look at the polling today, is irrelevant who wins this primary tonight. It's going to be a very stiff undertaking for Democrats to hold that seat.
All right, Rick Davis and Jeannie Shanzano, our signature political panel, joining us on this primary day. Thank you so much. And Joe, again, we almost forget that there's still ongoing primaries because we have our presumptive Republican and Democratic nominee for president, but there still are a lot of important ones that are for other races that we still have to pay attention to.
This is a big one in Maryland. To your point, you get this together.
Yeah, indeed.
Let's get up to date on world and national news right now. Amy Morris has that for us in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. Secretary of State Antony Blinken is in Kiev today, where he met with Ukrainian President Vladimir Zelensky. The visit comes as Ukraine is struggling to hold back a major Russian offensive near Kharkiv.
We're determined, along with many other partners for Ukraine, to make sure that you succeed on the battlefield.
Blinken says American support from the new bipartisan aid package is now making its way into that fight. Another day of testimony from Donald Trump's former attorney and so-called fixer, Michael Cohen, in Trump's criminal hush money trial in New York. Cohen told the jury yesterday Trump played a pivotal role in orchestrating payments to silent stories. House Speaker Mike Johnson is in the courtroom with Donald Trump today, showing his support.
The American people are not going to let this stand. Election day cannot get here soon enough, and we will continue to shine a light on all of this in Congress because we have that constitutional responsibility.
Court's on a lunch break right now. Meanwhile, a New York state court upheld the gag order that restricts Donald Trump from speaking publicly about those involved in this trial. Former UBS risk manager Brian Fairbanks has returned to the witness stand in the Archegos trial. Bill Wong and Patrick Halligan are co-defendants in that trial, accused of artificially inflating nearly a dozen stocks before a meltdown 3 years ago wiped out Archegos. Fairbanks told the court that there were concerns about Archegos having the same book with those other banks. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks, bonds, and the dollar all seeing small moves ahead of key inflation data tomorrow morning. We get the CPI report, 8:30 a.m. Wall Street time. Complete coverage on Bloomberg Television and radio. Also today, Jay Powell again signaling that the Fed will likely refrain from cutting rates for now. We do have the S&P little changed, up 2 points. That is a gain of just under 0.1%. The Dow down 25, drop there of 0.1%. The Nasdaq Composite Index up 48, higher by 0.3%. 10-year 4.45% with a 2-year that's now yielding 4.82%. Spot gold up $17 the ounce, 23.54, a gain of 0.8%. West Texas Intermediate crude down 1.5%. Those meme stocks keep on going. GameStop up again today by 38.5%. AMC Entertainment up 38%. And right now we've got Tupperware up by 5.6%. Recapping, S&P little changed, up 3 points, up by about 0.1%. Balance of Power continues, the Tuesday edition. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie, we thank you. Charlie Pellet covering the markets for us every day here on Bloomberg TV and radio. And thanks for joining on the fastest show in politics alongside Kaylee Lyons. I'm Joe Matthew. As we were just discussing, Kaylee, the political challenges that Israel policy has brought the Biden campaign and the Biden White House, for that matter. It's been a problem for a lot of progressive Democrats, and the withholding of at least one, maybe two shipments of weapons upset a lot of Republicans on this matter, which will point our listeners and viewers to House Resolution 1219, a messaging bill, but an important one today, Kaylee, that we'll see a vote tomorrow, looks like.
Yep, that is when the House is set to vote on this. This is essentially a bill that would force President Biden to send withheld weapons to Israel. Remember that this weapons withholding that we've seen the administration take here is offensive weapons, large bombs that they have not yet sent, just paused for now because of concern over how they could be used in Rafah. Does not actually have anything to do with the supplemental funding that Congress passed. That was mostly defensive weapons, including things that would restock the Iron Dome missile defense system. But there has been a lot of consternation about this decision from the administration, and now there's going to be an attempt to put members of the House on the record choosing a side on this. One of them who is going to have to do so is joining us now. Democratic Congressman Brad Sherman of California is with us here on Bloomberg Television and Radio. Congressman, welcome back. Thank you so much for joining us on Balance of Power. Will you be voting yes to this bill tomorrow?
I will probably vote no. I wish the Republicans had worked with Democrats on a bipartisan resolution that we could vote yes on, because we should be shipping those weapons. And much more important than the bombs that are getting all the discussion is the JDAMs. Those are kits that turn smart bombs, dumb bombs, into smart bombs. And to criticize Israel for not acting with precision while depriving them of the kits that make the bombs act precisely is just the wrong message. The problem with the Republican resolution is that it not only deals with these immediate concerns, but makes Israel permanently exempt from the Leahy review. That's a review to see whether the countries receiving our weapons are using them according to international standards and our standards. Israel passes that review. Israel is doing a better job, and it's a very difficult job, but a better job than any other military in waging urban warfare while seeking to minimize civilian casualties. Now, it's a very hard thing to do, and there have been civilian casualties. But to exempt Israel permanently from the standard is like me going to the high school and telling them, don't make my kids take the test. No, my kids are smart. I want them to take the test, and I know they're going to pass. And what we should do is have this standard apply and show that Israel is, in fact, complying with international law and our own standards. To exempt them feeds into this worldwide narrative that Israel is not seeking to minimize civilian casualties. Now, given that Hamas, their whole strategy is to surround themselves with as many women and children as possible while firing rockets at Israel, that makes it difficult on Israel. But that is part of the standard that's used to review, and Israel should not be exempt. Israel, though, however, passes the standards.
the report by the State Department, Congressman, thanks for being with us today, that Antony Blinken submitted last week does bring some concerns, accusing Israeli forces of potentially violating international humanitarian law. Have you told the president how you feel about this?
I have told the State Department that I don't think that they phrased things correctly in that report. But the fact is that potentially violate, everybody potentially might have violated. What in the hell does that mean? But the fact is that Israel not only complies with the standards, but they have a system for reviewing their own military. Look, in Vietnam, we didn't comply with all the standards, but Lieutenant Kelly went to prison because we identified and we had a system for reviewing the actions of our individual soldiers. Israel has that as well. They're conducting a number of investigations. So according to Israel, it is possible that some of their soldiers acted wrongfully. And according to America, it is possible that some Israeli soldiers have acted wrongfully. But that the Leahy standard isn't that you cut off weapons to an ally because some soldier may have acted wrongfully. You, in fact, you want to see the top echelons of any allied government implementing standards to hold their soldiers accountable. Israel does that. And that's why the ratio of civilian to terrorist deaths in Gaza is actually considerably better than what we saw in Mosul and Fallujah. And we've got a very moral and very capable military force. And that's what we used in Iraq.
Well, Congressman, it's great to hear your perspective on the issue of Israel's ongoing war with Hamas, given your seat on the House Foreign Affairs Committee. But you also have a seat on another committee, which we'll be focusing on here at Bloomberg tomorrow. House Financial Services will have the prudential regulators in front of you and your colleagues in a hearing. I'm sure there will be some questions for Michael Barr of the Fed over the Basel III endgame and what that's looking like. But I'm imagining, especially your Republican colleagues, will have some very tough questions for Marty Grunberg of the FDIC after that scathing third-party report came out about the workplace culture at the FDIC. There have been a lot of calls, sir, for the chair to resign. Would that at least go some distance to solving what is described as a deep-rooted problem?
I think we have to deal with the atmosphere at FDIC. They have over 6,000 employees, and they deserve a better atmosphere. But as important as those 6,000 employees are, every American has a stake in whether these Basel III regulations serve our economy well. If we go too far one way, banks won't have the sufficient capital, and we'll see a need, or at least a claim need, for bailouts in the future. But if we go too far the other way, banks won't lend, particularly to small business. They'll just invest in treasury bills, and that will leave a small business without a way to get the funds that they need. In addition, there are individual problems with the proposed regulations. Provisions that don't treat appropriately energy efficiency standards and clean energy tax credits, which are an asset the bank should get credit for. There is a language in Basel III that will not give credit for mortgage insurance. So banks will be reluctant to lend to first-time home buyers, even if they have mortgage insurance that, as a practical matter, insulates the bank from risk. We've got a host of other problems where these regulations seem to push the banks toward investing in bonds on Wall Street and push them away from making loans to local businesses on Main Street. That is the exact opposite of what we need. It's local businesses that need the capital. Wall Street's doing a fine job providing money to publicly traded corporations.
Congressman, it's great to have you back. Brad Sherman, the Democrat from California, walking us through a couple of issues today. Thanks for joining us today on Bloomberg. I'm Joe Matthew alongside Kaylee Lyons here on Bloomberg TV and radio, and thanks for joining us on Balance of Power. We heard from the president a short time ago addressing the nation from the Rose Garden, where he made good on expectations to raise tariffs on certain China imports. If you've been with us here on Bloomberg TV and radio or on the terminal, you saw this coming. EVs, solar panels, batteries, semiconductors, all on the list. Kaylee, this is market-moving stuff coming from the White House today, and I guess the president's trying to encroach on one of Donald Trump's lanes here.
Yeah, Donald Trump, of course, has proposed something much more sweeping, 60% blanket tariffs on every import coming from China, whereas the administration here is perhaps being more targeted. The question, Joe, is to what extent are these symbolic and to what extent will they actually have an impact, considering existing tariffs are already in place for a number of these goods, essentially boxing Chinese products out of the U.S. market already.
This is the type of thing we need Jenny Welch to help us with. That's why she's at Bloomberg. Of course, geo-economist in our geopolitical division at Bloomberg Economics. It's great to see you, Jenny. Welcome back. This is something that does smack of Donald Trump, but the president also said in the Rose Garden that we weren't really getting any imports from China out of our trade deals anyways. Does this change anything?
So I think what this will change is particularly these specific sectors. As you noted, this is a very targeted move to target the industries that President Biden has made a lot of investments in and protect those investments so that they can be the industries of the future, as he calls them. In terms of the macro impact on U.S.-China trade, it's pretty small. The macro impact on China's economy is also small. But the signal it sends about Washington's interest and commitment to competing in these industries is major for Beijing.
Well, so what signal will Beijing send in response? Already, their Ministry of Commerce has essentially said that they are not in favor of this. They view it as a political move. Should we expect retaliatory tariffs on U.S. goods going to China in response?
Our expectation is that Beijing's response is likely to be more in the symbolic category of things for a few reasons. One, again, the impact on China's economy and on U.S.-China trade is relatively targeted. It's relatively modest. Second, China's probably aware of the fact that the EU is watching all of this very closely, and it could factor into the EU's own pending decisions about how it approaches Chinese goods like EVs. And third, retaliation bears some risk and harm to China and China's economy. We saw during the original trade war that China actually downshifted some of its retaliatory tariffs to avoid further harm to China's economy, which is now facing even greater headwinds than it was back then.
Political manipulation, I think, is how Beijing described this when it was at least anticipated. Jenny, then what's the end result with our relationship, having just seen Antony Blinken and Janet Yellen in Beijing?
Well, on those trips, both Secretary Yellen and Secretary Blinken pretty clearly signaled that the United States was concerned about overcapacity in several of these sectors, right? Yeah. I think this has been a pretty well telegraphed move that Beijing's been expecting.
Well telegraphed indeed, and symbolic, as we've discussed, in large part, at least for some of these industries, like electric vehicles, for example. You can't really buy a lot of Chinese-made EVs in the U.S. as it is. For some of the other sectors, though, in which we've seen the tariffs go into place, including a 25% tariff now on critical minerals, things like batteries and the stuff that goes into them. The U.S. needs these, right, to power a greener energy future, and we're still heavily reliant on China for those things. Is this going to backfire to some extent?
So I think that's the exact reason the Biden administration took these steps, is they're concerned about China's dominance of these supply chains and U.S. reliance on them. In particular, as you mentioned, critical minerals, batteries. We also get the vast majority of our lithium-ion batteries, which are critical to EVs and other clean energy products from China. That's part of the reason why the administration is phasing some of these tariffs in. Some of them will come into play, like EVs, this year after the initial comment period, but several are for 2025, 2026 to allow the market to adjust them. And it's to create that space for more resilient, sort of diversified supply chains in these sectors.
The idea of this as a tacit endorsement of the Trump tariffs is something I brought to Gene Sperling, who joined us earlier in the broadcast, one of the president's economic advisors, and he wasn't having any part of that. We do need to acknowledge all the Trump tariffs have stayed in place. They didn't bring down any of them.
Yes, no, that's absolutely right. And this is a process that folks should know began several years ago. Yeah. It took a long time for it to come to culmination. It's an opportunity for Biden to put his personal stamp on the U.S. trade approach to China and underscore what his priorities are and protect his investments. But yes, it reflects continuity in terms of concerns about the U.S.-China trade imbalance that former President Trump also shares.
Well, and that President Biden called out the Trump administration policy when he was actually in the Oval Office, as well as the policy that Trump said he would pursue if he gets to go back there again as president, this idea of 60% blanket tariffs. He said that that would raise costs by a certain dollar amount for American consumers, essentially be inflationary. Will these tariffs, though, announced today also be inflationary, or are we likely not to really feel the economic impact?
I think for these tariffs, no, it's a more modest impact. For many of these goods, again, with the exception of batteries and critical minerals, where we do import a lot from China, we're actually not getting very much from them this phase. But yes, if former President Trump were to be reelected and follow through on this pledge to enact 60% tariffs on all Chinese goods, that would have a significant impact on U.S.-China trade, bring it down to almost zero. Depending on the timeline in which he does that, could be quite inflationary.
All right, Jennifer Welch, Bloomberg Economics Chief Geoeconomics Analyst. This is the very definition of geoeconomics. Thank you so much for joining us here in Washington. But it's about that time where we move from Washington up to New York because, Joe, Bloomberg Business Week is about to begin.
Yeah, it sure is. Did you see who's in with Carol today?
I did.
The great Barry Riddles. I love this. What do you guys have coming up?
It's amazing when you leave the door open. You never know who's going to wander in. I am so looking forward
True. I've been in that studio. I know that.
It's going to be great. We're going to listen, talk about the inflation print today, tomorrow's. I'm curious what Barry has to say about that. Also, we've got a lot going on in the world of artificial intelligence, whether it's Alphabet, whether it's OpenAI, guys. So a lot coming your way in the next 60 minutes. And Barry, you know, he can always surprise you.
Bring the wisdom on Bloomberg Business Week. It's coming up next, only on Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Tuesday, May 14th. Carol Masser, Tim Stenivek is off, and right by my side, Barry Ritholtz, host of Masters of Business and chair and CEO of Ritholtz Wealth Management. We got a lot to talk about, including an inflation print that was kind of a little worrisome and then kind of maybe not so much.
Can we call it mixed?
We can call it mixed. All right, and that's exactly how the trade is reacting. So we're going to get into that because it is a muted day of stock and bond reactions. We also had some comments from Jay Powell. So we're going to talk about that inflation print. We're going to talk about the Fed chair's comments. He did say whether or not he thinks inflation will be persistent. I feel like it's more Jay Powell talk, Barry, if you will.
Yeah, there's a lot of that. And I wish I could sit down with Jay for just a few minutes and say, can we stop looking at lease renewals as part of our inflation prints? Those were signed a year or two ago. They don't really matter to what's going on today.
All right, we're going to get into that with Mike McKee. Sounds like you've been thinking about this. We've got a double dose of AI coming your way, everybody. OpenAI launching a faster and cheaper model of ChatGPT, and then Alphabet unveiling also its own batch of AI features. We're going to dig into that. Also from the world of technology, Amazon's all-important AWS has a new CEO. So what's that all about? And then David Costin over at Goldman Sachs, he's the chief U.S. equity strategist, and John Weiss, co-CEO of Wells Fargo Corporate Investment Bank. We're going to get a great feel of what's going on in the business world, deal world as well. But first up, let's get you going on this Tuesday with a check on the trade and your top stories. Here's Charlie Pellet.
Hi, thank you very much. Does it get any better than this? What a lineup. Carol Masser, Barry Ritholtz in the same studio. The Dow trading lower right now. We've got the S&P. We've got NASDAQ higher. Little change on the S&P right now, up 4 points, up less than 0.1%. Stocks, bonds, and the dollar all seeing small moves ahead of key inflation data tomorrow morning. Jay Powell once again signaling that the Fed will likely refrain from cutting rates for now. Our Michael McKee is standing by. He'll have more on the economic data and Powell's remarks coming up in just a moment. S&P, as I mentioned, up 5. That is a gain of 0.1%. We've got the 10-year right now, 4.45%. The 2-year, 4.82%. Spot gold up 0.9%, $23.57 the ounce. And West Texas Intermediate crude down 1.6%, $77.93 a barrel. Meme stocks are back big time. GameStop up 44.5%. AMC Entertainment up by 36%. We'll throw in Tupperware as well, up now by 7.7%. Again, recapping, stocks are mixed. S&P right now up 4, gain there of 0.1%. And that is a Bloomberg Business Flash.
I'm thinking Barry might have some thoughts on meme stocks, but maybe we'll dig into that in a little bit. No thoughts?
It just continues to astonish me. People got so spanked in those, overstaying their either piling in late or overstaying their welcome, and yet the lure of easy money, it's a siren call. Investors can't help themselves.
74% gain, 80% gain in a day.
If you were in it lower, the problem is it's running up because people are piling in late.
Yeah, exactly. All right, we'll get into that. We're going to scratch that surface in a little bit, but we've got to talk about the inflation print today. That was, of course, a headline number, and producer prices did top forecasts in the month of April. However, key components that feed into the Fed's preferred inflation gauge were more muted. Fed Chair Jay Powell actually speaking at an event in Amsterdam, saying that the PPI reading was actually quite mixed and that he wouldn't call the reading hot. But
the first quarter in the United States was notable for its lack of further progress on inflation. We had higher readings in the first quarter and higher than we expected. We did not expect this to be a smooth road, but these were higher than I think anybody expected. And so what that has told us is that we'll need to be patient and let restrictive policy do its work.
All right, that, of course, with Fed Chair Jay Powell there. Someone on the Bloomberg team always adept at deciphering the nuances of economic data and also what the Fed has to say, including Jay Powell, is Bloomberg News international economics and policy correspondent Michael McKee here in studio. All right, Jay Powell, right in mixed? Barry, you called it mixed too, right?
I mean, year over year, plus 2.2%. That's fantastic. That's the two handle the Fed is looking for. If you look at the long history of producer prices, they tend to drag CPI with them, either up or down. It's the input price and subsequently ends up in consumer prices.
All right, Mike.
Mixed is
Barry
a good
right?
mixed is a good word. They're two different. They're constructed two different ways. Consumer prices are what you pay.
Right.
Producer prices are what companies receive. And overall, what they're
They don't always
charging.
pass on the costs.
Well,
right?
a good example is health insurance. You go to the doctor, you pay your $20 copay, but the service provider is getting a lot more out of the insurance company, and that's not captured in the CPI, but it is in the PPI. So there's some other differences if you want to get really, really nerdy, which I will warn you don't. But
But having said that, that report, I think when I initially heard the number breaking down on surveillance this morning, I'm like, uh-oh. And then, of course, the devil's in the details, or the, saving grace is in the
there's
details.
definitely some inflation out there that is still sticky, but the thing that matters most to the Fed and to people on Wall Street who follow the Fed are the PCE inflation index, and a number of categories of the PPI go into the PCE, including airfares, which rose by 3.8. Airfares dropped 3.8%, and if you look at previous instances when that happens, these are not seasonally adjusted numbers. They go to the PCE and CPI, they get seasonally adjusted, and the feeling is that the seasonal adjustment will really push down on the airfare component of the PCE. So,
do you remember this time last year we were talking about the season of revenge travel and how prices had skyrocketed? And in the March, April, and May PPI numbers, they were very positive, very strong, which is a negative for those of us waiting for inflation to come down.
Yeah, hospital outpatient care also felt that's another one that goes into the PCE. So the people who figure these things out have been busy scribbling away on their Excel spreadsheets because they're not trusting AI yet, I guess. But normally PPI comes out after CPI. There's only going to happen 2 times this year, 2 months this year.
Yeah.
So after tomorrow, you'll get a lot more forecasts for PCE that'll probably suggest it's going to be lower, which then changes, as Barry knows, everybody's mind on Wall Street about what's going to happen.
Right.
Well, as we said yesterday, we were talking, about I just wish, let's rip off the Band-Aid and let's get to CPI. So let's go through the numbers and what you are watching out for in the CPI print tomorrow.
Well, we'll be watching for how broad price increases might be, but the biggest thing everybody's going to keep an eye on is housing, and Jay Powell talked about that again today. It's the Godot of disinflation. Everybody's waiting for it. It just doesn't show up. Will it finally tomorrow? Could be, or maybe not. Barry, you talked a little bit earlier about the rents portion. I think a lot of people misunderstand how the Fed looks at this. They're looking at a lot of private sector information as well that include current rent contracts.
That's right.
Contracts. And so they're not just relying on what's a year old and waiting to come through, but the CPI does. And so when the Fed is looking at it, it's looking at it a little bit differently from the way the Bureau of Labor Statistics is.
So one of the new series that has come out from BLS has been new lease renewals, which is very significant because about 2/3 of existing leases for apartments and single-family homes are renewed. And if you're just automatically renewing your existing lease, that was negotiated 1 or 2 years ago. And let me remind everybody, 2 years ago, May 2022, we were at peak inflation. So what's built into those renewals are 6-8% increases. If you're moving today and negotiating a new lease,
it's going to be lower.
It's going to be 2-3-4%. And so when you see the numbers in owner's equivalent rent, not only are they very laggy, but they're showing all those renewals. I'm glad BLS has broken that out as new leases because they've come down practically to zero versus existing leases, which are still carrying that. And whatever the Fed's inflation number today is, it's not affecting a lease you signed 2 years ago. Your option is either renew the lease or pack everything up and move, which is a pain in the butt, which is why people put up with annual 2 and 3% increases.
The only problem here is that this is what they call an experimental index, and it's not incorporated into the overall CPI yet.
Right, that's exactly right.
One hopes that it will be soon.
Anything new from Jay Powell today, just quickly to wrap up?
Nothing new from Jay Powell. Basically, high for longer. We don't have confidence.
Wait, what?
We're waiting. We're waiting for more confidence. He's confident that the Fed has the ability to withstand any political pressure.
Does it matter that he said, "I don't think we know if inflation will be persistent"? To me, it felt like.
I think he's just telling you what everybody thinks at this point. I mean, we've all been surprised by what's happened with the economic data.
Let me just remind everybody that after the huge surge at the end of 20 through 21 and 22, producer prices, the annual rate of increase is back to where it was in the middle of 2019 pre-pandemic. So the people who have been saying this is transitory, this now looks like it was transitory. It just took 18 to 24 months, not 6 to 12 months.
We had long COVID, we have long transitory.
I'm getting the T-shirts printed up. All right, we're going to leave it on that. Mike, thanks as always. Michael McKee, International Economics and Policy Correspondent here at Bloomberg News. All right, that's the day's economic news. Let's get to what seems to be a daily drop of news on the world of artificial intelligence. A lot going on. Alphabet's Google I/O Annual Developers Conference, that's happening today. It's expected to talk about a lot of different AI features for its search business and broader ecosystem. This event coming one day after a similar one from OpenAI, where it launched a faster and cheaper version of its ChatGPT model. So let's get to our tracker of all things artificial intelligence. Bloomberg News AI reporter Rachel Metz. We caught up with her at last week's Bloomberg Technology Summit, got a great rundown on all things AI. But as we said, everything's happening or something new every day, it feels like. She's with us from San Francisco. All right, Rachel, let's start with what we got from OpenAI. Faster, cheaper model. What's different from the version that everybody's been talking about for the last year and a half?
Hello. Yeah. So we have GPT-4o. The O in OpenAI speak stands for Omni model. And basically what that means is they used to take a bunch of models that could do different things and chain them together. And now what they're going to be doing is they're sort of pushing it all into one AI model. And that's part of why they say they're able to make it faster. So they can do things like a much more close to real-time audio interaction, which makes it feel more lifelike. Like if you're talking to the app right now and you want it to talk back to you, you're gonna have to wait. Like there's some very clear latency, and then it will respond in one of the several voices it has in there. With this upcoming voice feature, it's very snappy from what they demonstrated, like almost instantaneous, as though I were talking to another person.
All right. As we said, a lot of news coming on AI. It also feels like every day or every other day there's some news on Paramount. Just want to bring you a headline crossing. This is coming from CNBC's David Faber. Yeah, feel free to weigh in. Sony rethinking its Paramount bid. Sony and Apollo, the bid for the entire company, becoming less likely. So maybe they're stepping out. Do you have any thoughts on that?
Me?
Yeah, I know. It's not what you. I don't know. Let's ask ChatGPT.
I don't know.
Let's ask ChatGPT how it's going to end up.
Exactly.
All right. So there's that going on. I also think it's interesting. You know, ChatGPT, right? It's kind of the gold standard, and I feel like everything is kind of measured off of that. Is that fair?
I mean, I think that it is fair in that people seem to be using it a lot. I mean, I think the figure that we have was like, what is it, like 100 million users or 100, something like that. People have used it. It's quite popular. And yeah, I think people think about it as sort of a gold standard in terms of what one can do right now. What is state of the art and replicable with a chatbot. So yeah, I think that's kind of a fair barometer.
So here's the question I have relative to the Google statement. You know, I've been using Google literally since late 90s, 2000, something like that.
Yeah.
Probably,
and
right?
the concept of organizing the world's information, they always did that really well till about, I don't know, 5 years ago. And suddenly search just became festooned with sponsored answers and ads and then Google's own products. And sometimes you have to go like 3 or 4 screens down to actually find a search result. And my personal search seems to be less on Google and more on products like Perplexity, which uses either the Claude or the Shannon or a couple of different AI engines. And I find the answers I get are so much better and the list of sources so much better than fighting on Perplexity, than fighting through the Google homepage. I'm wondering how much of this AI built into the search bar is a recognition of Google search has really become fairly mediocre compared to being the best there was.
Well, Rachel, come on in on that. And I'm curious about, at this developer conference event, what are we learning in terms of on the AI front that might help maybe change Barry's view when it comes to Google and Alphabet?
Sure. I mean, I think you're right about Perplexity. A lot of people have been drawn to it. It seems to be combining a lot of things in a really smart way. When I use it, I'm struck by how well it puts things together, and it has some good follow-up questions I might want to ask, things like that, insights its sources. So from my reporting, we know that OpenAI is working on its own search project, which may be similar to Perplexity. And we saw this morning that Google said it's going to make the sort of AI-assisted answers that right now are sort of an optional thing. It's going to make those a more integrated part of its search results. So if that works for you, and we'll probably have to see over time, that could make it so you feel better about the results that you're getting. But I guess for me personally, I'm still kind of wary of trusting anything that's AI assisted unless I check with the source. Perplexity obviously is really good for that. So I think it's going to take some time still for us to figure out what works best, and how we should put these tools together. And maybe you'll use Google for certain things, Perplexity for other things, OpenAI for yet other things.
Yeah, you always have to double check that hallucinations are not part of your answer. and that is the technical term for when AI either finds something wrong on the internet or just kind of spitballs and makes it up, things that are wildly wrong. A couple of weeks ago, I interviewed Bill Dudley of the New York Fed, and I was kind of surprised to learn from AI that he was an NFL fullback in the 1940s, especially because he wasn't born until the 1950s.
That would be a hallucination.
Yeah.
So listen, Rachel just got
the same name, right?
Yep,
and it just
same name.
conflates those. I mean, there's multiple Rachel Metzes out there, and AI sometimes will conflate us. I have multiple jobs according to AI that I've never had, things like that.
You would think intelligence would say, oh, this was before he was born.
Right.
Maybe it's less intelligent than we're giving it credit. Although Jim O'Shaughnessy said, AI today is the worst it'll ever be. It's only getting better every day.
Listen, the more data you put in, right, Rachel? Just got 20 seconds, the better it's going to become, we assume.
That's what people have been saying, but I don't know. I think we may. We've been seeing those kinds of results. That is true. But we'll see over the next few years if more compute, more data really does lead to better AI.
Yeah, it's only going to be better as good as I guess the data is. Rachel, I know a lot going on, and we appreciate you jumping in. Bloomberg News AI reporter Rachel Metz. Hey, folks, just want to mention Paramount shares down about 7%. This as coming from CNBC's David Faber. Sony rethinking its Paramount bid. That bid becoming less likely. GameStop shares, which are up another 55%, a stop in trading.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Lots going on in today's market. GameStop shares, they are back up and running after a circuit breaker trading halt. GameStop up now by 60%. And repeating an earlier headline, Sony and Apollo's bid for all of Paramount Global is fading. That according to CNBC, citing sources. Right now, we've got the Dow up 50, higher by 0.1%. S&P up 11 now. That is a gain of 0.3%. NASDAQ higher by 94, up by 0.6%. 10-year ahead of the CPI report tomorrow morning. We got PPI today. 10-year yield 4.45%. 2-year 4.81%. Gold up $21 the ounce, up 0.9%, 23.58 the ounce. And West Texas Intermediate crude lower now by 1.5%, 77.95 for a barrel of WTI. Boeing delivered 24 commercial jets in April, lowest monthly tally since February of 2024. Boeing shares up now by 1%. After earnings, Home Depot down 0.4%. We will be hearing from rival Lowe's. 1 week from today, Lowe's shares down now by 0.9%. Recapping, stocks higher across the board. S&P right now up 13, up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Yeah, it's a busy Tuesday. All right, Charlie, thank you so much. Carol Massar, along with Barry Ritholtz. Tim is off today. We are keeping a watch on shares of Amazon. They're not doing a whole heck of a lot, but a little bit of a swing. They were down about 1.7% earlier in the session. Right now, just up a hair, 0.25%. This on a day when a big change happened in the company's C-suite. Amazon's cloud computing division chief stepping down, making way for a new CEO, Matt Garman, who is the unit's top sales and marketing executive. With what it means for the business and also maybe from a financial perspective. We welcome Bloomberg News technology reporter Matt Day and Bloomberg Intelligence senior analyst for e-commerce, athleisure, and off-price retail, Poonam Goyal. Matt's in our Seattle bureau. Poonam is in New Jersey. And Matt, I want to start with you. Lay out the news for us. What do we know about why the change, why now, and what the significance of it all is?
Yes, we don't know a ton of the why now. What we do know is that Amazon CEO Andy Jassy says Adam Selipsky, his right hand running the cloud business, is going to step down next month. He's going to be replaced by Matt Garman, who is a little bit of an unknown outside of the company, but is a longtime AWS executive. Before he ran marketing.
He was an intern, right, at AWS?
Intern, business school intern out of Northwestern who came back to work full time and made good. So he's taking the reins next month. Got some big shoes to fill as they try to battle it out in artificial intelligence, especially.
So was this unexpected, Matt? Was this a surprise, or is this a normal? He seems to have been with the company since the very beginning of Amazon Web Services. Isn't this just a normal replacement, or is this a bit of a surprise?
I'd say his Garmin taking the role is not a surprise at all. He was among the candidates to succeed Andy Jassy, the founding CEO of the cloud business, when he took the top job at Amazon a few years ago. But I think the timing is a little bit of a surprise. Executives at Amazon don't tend to move around all that much, especially in the top seats like the cloud business was. You know, Adam Selipsky's had a few-year run there, but that's not really very long at all by Amazon standards.
All right, Poonam, come on in on it. We know the cloud unit. Every time they report earnings, we're like, cloud, cloud, cloud. What are they doing? We know it's so important. Put it in perspective in terms of this unit, why it is so important to Amazon, and what you make of these changes.
Sure. I think the changes really don't mean much today. We don't think it'll be disruptive to their growing cloud business, which stands at a run rate of over $100 billion in revenues. And actually, if you look at when this change happened, it happened when Amazon's AWS segment hit its peak margins, right? Over 37% operating margins in the last quarter. So we think that AWS will continue to grow and it will continue to remain profitable, moving up to $200 billion and near 40% EBIT margins over time. We don't think that Matt Garman's appointment and Adam Selipsky's departure is really any hiccup in the company at all.
So why are they doing it then? It seems to be doing Poonam pretty well. I understand what you're saying, doesn't mean anything, but then why change an executive?
Well, it's I guess a decision, right, that Adam has made for himself. We read that, he wants to spend time with family and figure out what to do next. It may be a personal decision, or he may have somewhere better that he wants to be. We don't know. But what we do know is that Amazon AWS segment is still in good hands, and especially with, Andy Jassy still at the head of Amazon and Matt Garman, a seasoned veteran there. We really don't think that there will be meaningful change in direction in the AWS business.
So we were just discussing Google's AI initiative and what the event that's taking place there. When we look at Amazon cloud services, how significant is AI to their growth, both in terms of storage and their implementation of it to facilitate better and more usage of their services?
Poonam, you take that first.
Sure. AI is at the forefront of every tech company today, and Amazon's AWS segment is no different. In fact, Carol, if you were to ask me, how many times they mention AI in their conference calls when you speak to them, I can count them more than the amount of fingers I have. So it's definitely very, very important. And we do think that they'll continue to step the pedal on their AI investments, not just for their cloud business, but also it has meaningful implications to their retail business, which is at a run rate of about $700 billion today in GMV. So important for the Amazon enterprise altogether.
Matt, come on back in. I was thinking about this after I read it this morning. Is this all about the needs, demands, and growth opportunities of AI? How are you thinking about what's going on and the importance of AI to the Amazon story and growth story going forward?
It's really an all-encompassing priority for them. Amazon is, best known for kind of foundational services, right? You can store files, you can store photos, you can run computing power. They've gotten a lot more sophisticated as the years have gone on, but they're fundamentally, it's the plumbing of computing, right? So with AI, they really have a battle to kind of stay relevant for that cutting edge, right? Where all this money and all this momentum is going. And it's been a weird look for them because it's not a conversation they've been leading in the last couple of years. We mentioned Google's event today. They're out in front. Microsoft with the OpenAI partnership has been out in front, and Amazon, for a lot of folks, racing to catch up.
So when we look at a lot of different segments of Amazon, a lot of them have captured market share but haven't been especially profitable. AWS is clearly the exception in the world of Amazon. Give us an idea of exactly how significant is Amazon Web Services to the company and its overall profitability?
Matt,
it's the reason they're able to fund so many investments in other areas. Now, Amazon they're careful to say we don't take the cash from AWS and literally bankroll other things, but just the way the math works out, AWS accounts for more operating income most quarters than the rest of the company combined. So it really does give them the flexibility to, say, make a $10 billion bet on satellites or invest in AI devices or build out their own logistics network, right? Just structurally, it's a more profitable enterprise than the retail side of the business, and it lets them make a whole lot of big bets.
Yeah, it's interesting. I'm looking at Amazon's having a great year. Certainly if you're a bull on this name, you like it. It's up 23% so far this year. And it's not going to be until August we get that next earnings update. And not that I'm counting down already, but we do think about it. But Poonam, Amazon, whichever way you dice it or slice it, we care what this company is doing, and we look forward to the earnings because I feel like it tells us a lot about what's going on, certainly in the cloud world, the consumer world. But what's kind of top of mind for you, maybe beyond this announcement? Because it doesn't sound like this is something that you're like, okay, stop the press is something new. But what is more important when you think about the Amazon story?
I think it's really about them continuing to plug along across all their segments, whether it's retail, whether it's a cloud business, or even advertising, which I know we didn't touch on. While AWS, as Matt said, rightfully so, it is the bulk of their profits. There's a growing business inside Amazon, which is the advertising business that is also very profitable. And I would argue that that's because of the size of their retail business in part. So I think those are, we're looking at everything when we think about when they're going to report in August, and we just want to see them continue to plug away to gain share in each of those verticals collectively.
And the interesting thing about the Amazon chart you mentioned, we are just about past the peak that was set in 2021. So this has been mostly dead money for 3 years. That recovery off the lows in late 2022, that has been a hell of a bull market, up over 100% since those lows. And the question is, how much further can they continue? Are they back on track to where they were pretty much pre-pandemic?
Well, I don't know, Matt, when you continue to do your reporting and you talk to various analysts and investors on it, what is it that's, are there concerns about, what's the next growth driver in terms of Amazon?
I think if you listen to investors say it, they think there's a lot of room to run, particularly if Amazon hits on some of its bigger, more ambitious bets. That's satellites and sort of turning the company into a telco. Healthcare is a big area of investment. And groceries, you only really need to succeed in one of those for it to be a different company. But that said, even absent any of those hitting, advertising is a structurally profitable business for them. So is the cloud, and both of those things are growing in the early innings.
It's interesting at Milken, talking with the Whole Foods CEO, and just kind of how that fits in and has made it a place where, yep, you walk into a Whole Foods, but they've been just very good in kind of planting these out there, and it's made it very easy to pick up deliveries. Like, it was just kind of overnight. And I just think about how, Poonam, we've talked about this a lot, and I'm sure Barry, just they're so entrenched kind of within our world, and they've become really good at building all that out, even after years of not making money, and now is all kind of, it feels like, come together in a big way.
Yeah, you're absolutely right. I mean, look, Amazon is part of our daily lives today, and when you have such a reach with the American consumer especially, it's hard to kind of, go away from that, right? We all want our stuff same day and next day, and Amazon's able to deliver that.
The one caveat I'd throw out is I've been an Amazon user since '98, and I can't help but notice the ads make it hard to find things. It constantly delivers you the wrong product. And Amazon was reliably the least expensive option for years and years and years.
Not anymore.
Now you got to double check prices. You have a lot of third-party sellers. You get some crazy markups. It's kind of become eBay.
Yeah, it's kind of interesting, the changing dynamics. Hey, guys, we're going to run, but thank you so much for weighing in on the news today. Bloomberg News technology reporter Matt Day and Bloomberg Intelligence senior analyst for e-commerce, athleisure, off-price retailer, Poonam Goyal. You are so right, and I do that because I used to be in stores and I would okay, what could I get it on Amazon? Oh, I'm going to do it on Amazon. It's not necessarily the case.
That's right. That's very different than it was, and we'll see what happens.
Yeah, exactly. All right, folks, you are listening and watching Bloomberg Business Week. Carol Master along with Barry Ritholtz in for Tim on this Tuesday. Let's get an update on world and national news. Off to Amy Morris we go. She is in D.C. Amy.
All right, thank you, Carol. President Biden has formally announced those tariff hikes on Chinese products, especially electric vehicles. And the president says these new tariffs will ensure American workers aren't going to be held back by unfair trade practices.
Price is unfairly low because Chinese companies don't need to worry about a profit because the Chinese government subsidizes them and subsidizes them heavily.
The administration is also looking to exclude some key equipment from the duties altogether to save costs for building American factories. Prosecutors in Donald Trump's criminal hush money trial say Michael Cohen is the last witness for the government. That means the government will likely rest its case on Thursday. The defense is about to cross-examine Cohen, trying to show him as a felon and a liar motivated by revenge. Meanwhile, a New York state court upheld the gag order restricting Donald Trump from speaking publicly about those involved in the trial. Former UBS risk manager Brian Fairbanks returned to the witness stand in the Archegos trial. Fairbanks told the court that he had been led to believe Archegos held positions in tech companies like Apple and Google, but later learned their biggest positions were in companies like Tencent Holdings and Viacom. And he told the court, quote, "My gut sunk." Fairbanks' testimony has so far strongly backed the prosecution's case that Bill Wong misled banks into backing Archegos bets. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now, a leg higher on the S&P, up 20 to 52.42. Gain right now of 0.4%. We got the Dow Jones Industrial Average pushing higher, up 113 now, up by about 0.3%. NASDAQ up 109, gain there of 0.7%. 10-year 4.45%, with that 2-year at 4.82%. Spot gold up 1%, higher by $22 the ounce to $23.58. And West Texas Intermediate crude down 1.3%, $78.07 a barrel. Bitcoin now down 2.8%, 61,316. Meme stocks ripping higher right now. Case in point, we've got GameStop after that trading halt, up now by 53%. AMC Entertainment Holdings up by 32%. And Tupperware joining the party, up 17.4%. So again, recapping, equities are moving higher. S&P 500 index up 22 points, gain there of 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We'll talk about veterans on Wall Street. We often mean individuals who have worked there a long time, seen lots of market cycles. People like Barry have lots of experience investing and trading in global financial markets, but it is also about the growing relationship between Wall Street firms and U.S. military veterans who, after serving their country, find a second chapter working at financial firms around the country. And that includes at Wells Fargo, which last year hired over 1,100 veterans, with 4% of Wells Fargo employees self-identifying as a veteran. 2 members of its board of directors are U.S. veterans. Bloomberg, by the way, hosting today the Wells Fargo Military Appreciation Event. With more, we welcome John Weiss. He's co-CEO of Wells Fargo Corporate and Investment Bank, joining us here in studio as the daughter of a vet, cousin's brother. I salute you, and I think it's really important that we remember those who serve our country. And I want to talk about that in a moment.
Salute your father.
Thank you, thank you. He and his brothers, World War II, all of them, and all came home, which was pretty remarkable. I want to ask you, though, because you have such a great lens on the world, and I think we're at this interesting juncture in terms of trying to figure out the way forward. The business environment, the macro environment, the deal environment. How would you describe kind of where we are?
Yeah, well, first of all, thank you for having me.
Thank
you. We're delighted to be collaborating with Bloomberg on this important topic of veterans. As to the macro picture, you know, it's, I guess, a unique time. I would say that the U.S. economy is quite resilient, and, you know, it's a good place to be headquartered. You know, every new piece of economic information sends us darting in one direction or another, and we've got CPI tomorrow, and the PPI that came out this morning is encouraging from a standpoint of, as the market digested it at least, encouraging from the standpoint of maybe a somewhat better inflation picture. But CPI is the important data point for this week, so we'll see how that comes out tomorrow. Deal activity, business activity, actually quite good. I would say there's a lot of pent-up demand, certainly a lot of private equity capital out there.
Looking to make those exits, right?
Yeah, well, on the one hand, looking to make exits, and on the other hand, looking to make investments. So both sides of the deal are covered there. And I would say strategics are getting a little bit more impatient about pursuing their own strategic goals. So I feel things are reasonably stable right now, as stable as you could say they could be.
You sound a little cautious.
Given that we've got, you know, a war going on in the Middle East, a war going on in Europe, and a lot of uncertainty around the U.S. election. So given all those things, it's remarkable how well the economy and the markets seem to be digesting it all.
So let's use those 2 wars as a leaping off point to discuss the work that you guys are doing with veterans. In my office, my CFO used to be a tank commander in Afghanistan. Our head trader sat in the back of EC-2 Hawkeyes directing all the traffic over Iraq during that war. What led, and by the way, they're fantastic and there are secret weapons. What led Wells Fargo down the path to, hey, we really want to recruit from this pool of people? How did you discover what an amazing talent pool and set of skills exists there?
Well, the first thing I would say is I don't think we're completely unique in this area. I think Wall Street in general has been very supportive of veterans.
Very welcoming.
So that's the first thing. The second thing is, look, we're always looking for talent. And when you are looking, as we are in our industry, for people that perform well under pressure, that would naturally bring you to this population of people who have learned to, to serve and to execute under pressure. And then there's, of course, the
it's a trait you recognize, right, John? In terms of, yeah.
Just get it done. Like, whatever we have to do, just get it done. I love that attitude.
It's absolutely the case. And then there's the last thing, which is, of course, we're supportive for social reasons. These are people that, in some cases, gave their all, but their friends certainly did, and they served their country. And a part of our responsibility is to help them transition back into society.
Because it's interesting, because I feel like, and I don't want to be, so critical of the government, but it does feel like people come home and then they don't have homes, they don't have jobs. You guys actually get into some of the basic needs. Yeah. It's about providing jobs, but it's providing things like homes.
But let's start with jobs. Within the corporate and investment bank, you mentioned that we've hired as a company 1,100 veterans this year. That's a pretty good pace, but we can probably do more. On the corporate and investment side, we have various programs that allow us to bring veterans on board for summer associate roles, for more permanent assignments. We're working with some of our clients to recognize the talent of their vets and give them opportunities to continue their careers.
That's what I think is interesting. When we talk about diversity, inclusion, equality, it's the supply chain, the pipeline. It's not just what you do at your company, but branching out.
It's working with your clients. We work with a lot of veteran-owned broker-dealers, for example, and we bring them into deals, and we try to help train their people in products and services that we provide that maybe they don't have the same depth in.
That's really quite fascinating, especially when you think about the problems we've seen in VA hospitals and things. Getting people on your payroll with your health care has to be a huge life upgrade for them.
Yeah, it's certainly. I mean, career matters, right, to overall livelihood. But getting back to the question that Carol asked a minute ago. So yes, the company very specifically has focused on the veteran population as an area for focus, and that focus takes. Comes in different ways. We've, on an annual basis, donated new cars free of financing to veterans. We've donated something in the neighborhood of 400 homes over the last 10 years. This is providing housing free to veterans. And we don't look at it as a handout. We look at, this is often used phrase, we look at it as a hand up, because what they really need is some assistance, and they will pay that debt back. They already have to society. So we feel really good about it. And we also give a lot of funding out of our foundation to various veteran causes.
I always think about the audience who's listening, and I think, again, we have segments of our society and population that are forgotten, including the vets. Is there a message that you think more widely that we should all think about as we go about our business on a daily basis?
I mean, it's not going to be a new idea to people, but we all live our lives in a very safe place, and it's because there are people out there protecting us, whether those are first responders here in domestic U.S. or members of the military serving outside the U.S. So I guess the message is we are all in this together, and we all have to bear our share of the responsibility.
How do you think about the future in terms of what Wells Fargo wants to do next?
What we want to do next?
Is it just more and just continue to build it out?
More, yes. Better, absolutely. We're focused as a company on running the bank better, serving our clients better, managing risk better, and just being a better run organization overall.
Yeah, really fascinating. And I do think about it. I think unless if you've had somebody in your life, like you say, you've got people working, or I've got it certainly in my family, many members, several have done tours in the Middle East. And I do think there's something about this environment right now where we're very sensitive to sending American soldiers over to some extent. But it's just the role of the United States plays globally in kind of protecting the world. Like, you just have to think about it, and we take it for granted to some extent.
You know, after 20 years of war in the Middle East, I think the country kind of has gotten fatigued, and it's easy to forget about the people coming home who then have to just turn their life upside down to normalize things. We've been a little negligent paying attention to them. I'm glad to hear you guys are moving in this direction, and I've been in this direction for quite some time.
Well, as a child of the 60s, all right, we can't forget some of the lessons of the 60s, and one of them was certainly welcoming the veteran back after the war, which we did not as well as we should have in the 60s. We certainly did, I think, well post-World War II, and hopefully we're doing a better job today.
It's interesting that you bring it, because I think about when my dad and his brothers came home, and the GI Bill, and going to school, and it was such a welcoming back, if you will, and such a support system, and that it's just kind of amazing to see kind of where it's gone. What do you think it is about the financial community? As you said, not just Wells Fargo, but we talk about it a lot here at Bloomberg in terms of the financial community and their support of veterans in particular. What do you think it is about that?
I think, I don't know, maybe part of it is the focus of New York City and understanding what happens when things do go wrong, which, you know, those of us who lived through 9/11 certainly remember. But it's also it's a part of society that wants to prove its sense of responsibility. I think Wall Street really does care about its image, and it cares in a real way about carrying its share of responsibility.
Yeah.
And when you look at the veterans, these are people who understand risk. They understand working within a team and leadership, and the parallels are just all there. If you want someone who has your back, whether you're in the field or on a desk, it's hard to do better than military veterans.
It just makes a lot of sense. John, great to catch up with you and just kind of hear about the work you guys are doing. Looking forward to hearing more. I know we're going to have another member of your team a little bit later on Bloomberg, so looking forward to it.
And you'll be hearing from Mike Riley, who runs or co-heads our markets division, who is a vet,
Navy, right?
Navy, ex-submarine commander.
Wow.
You talk about somebody you want to have, having your back. Mike's the guy.
John, thank you so much.
Thank you.
John Weiss, he's co-CEO of Wells Fargo Corporate and Investment Bank. And now we want to get to another major voice in the financial community. Bloomberg News Wall Street reporter Shonali Bosick at the Goldman Leveraged Finance Conference, catching up with David Kostin, Chief U.S. Equity Strategist at Goldman. Shonali, over to you.
I'm standing by with David Kostin, Chief U.S. Equity Strategist over at Goldman Sachs, and it's an interesting day because we do see the S&P just over 5,200. Of course, we know that is also your target for the S&P 500 for the end of the year, David. What would cause you at this point to boost that target?
Well, the target is based on fundamental analysis, and the way we think about it has the economy, earnings, valuation, and money flow. And so on that basis, our 5,200 target is...
Okay, you're deep in the jungle, hanging with a friendly jaguar. Or how about in outer space, playing the bass? Let your imagination run wild with the new generative AI tools in Adobe Photoshop. Create anything you can dream up just by typing a text prompt. Treehouse in your jungle? Unicorn in your spaceship? Just type it. This changes everything. Hit the banner or go to Photoshop.com and try it for free.
In that framework, economy, earnings, valuation, and money flow is suggestive and supports our analysis around 5,200, which is a target for the end of the year, which is, as you indicated, roughly a flat return from now till the end of the year.
Is there more upside or downside risk to your view at this point?
I would say there's probably more upside. The upside would be, for example, if the Federal Reserve was to cut more rapidly, more dramatically than we're assuming. The market is assuming somewhere maybe 1 to 2 cuts. The Goldman Sachs Economics is looking for 2 cuts this year. So to the extent that that was to be front-loaded and you saw a cut in July, that would be supportive of potentially a higher equity market. That's not our base case. Our base case is, in fact, that the market will trade at around this level of multiple, or in fact even lower multiple as we come towards the end of the year.
When you think about the end of the year, there are some risks ahead, particularly as you've talked about before, election risk.
Right.
What are the things that investors are not thinking about headed into that season at this point in time? How much volatility could there be?
Well, one interesting aspect of the election is that the volatility for the October futures contract is actually trades at a premium. But the volatility contract for November, which covers a little bit later than the actual election, trades at a discount. And so one question that is often asked is, when will we actually know the outcome of the election? Not so much whether it's President Biden or President Trump, but rather, will this be known, a final decision on the 5th of November, or is there recounts that take place and sort of uncertainty? That's a question we get from a lot of portfolio managers.
What happens after that point? You think about where volatility sits today on a spot basis, it's almost alarmingly low. Is that deceptive?
Well, I think there's questions that clients ask about what are the policies that may change. Will there be more tariffs? Will there be a change in the regulatory environment in terms of antitrust? What kind of environment will there be? Will Congress be Democrat or Republican in the House and the Senate? And how will that, what will the result be from the election? So those are some questions we get. And then ultimately, as a portfolio manager, what does one do as an investor? So we think about U.S. companies that are exposed domestically from a revenue point of view as compared with companies that are exporting, generate most of their revenues overseas. So that is an area that people, as fund managers, are more focused, and we get more questions about a domestic-oriented. We look at companies with the exposure to antitrust and what is going to be the result both of the existing number of major lawsuits that are going on now in the world of technology, and does this dissuade a lot of executives from pursuing potential acquisitions as a result of the current environment? And if that was to change, might you find greater proclivity on the part of CEOs to acquire companies? Right now you have CEO confidence that has actually increased pretty substantially. And so that's some of the discussion points with clients.
It would be silly for me not to ask you about another thing that is starting to impact markets, and that is the return or lack thereof, the retail investor. Is meme stock mania 2.0 back?
Well, we have to think of the number of stocks that we're really looking at. There are a group of stocks, relatively small in number, that have a lot of excitement about those. But from a fundamental point of view, they tend to be relatively smaller in market capitalization, and they don't affect the index as dramatically as some of the larger companies in the market. We think about the big flows that take place in the market, the real drivers. There is household demand. There's mutual funds, foreign investors, pension funds, mutual funds. These are the big ownership categories, but the real net demand is coming from share repurchases on the part of companies. Companies will buy back, in our estimate, in the S&P 500, close to a little more than $900 billion of earnings, and that would be money repurchasing stock that's going to be up around 13% year to date.
David, we have to leave it there. We're hitting up a hard break shortly. Thank you. That is David Costin, Chief U.S. Equity Strategist over at Goldman Sachs. Back to you.
All right, so appreciated. Our Shonali Bostic there, Bloomberg News Wall Street reporter at the Goldman Leveraged Finance Conference there, as she said, with David Costin. So interesting interview. All right, folks, that's going to do it for this hour of Bloomberg Business Week. If you're watching on TV, the close is coming your way. Barry, great to have you here. We've got some buying here with about an hour to go.
Yeah, look at this taking place. So much. It's always so fun to watch the intraday action.
Right?
I never have any idea what's driving it, and I always laugh at the explanations the next day. It's just pure, hindsight bias and narrative fallacy.
A little cynic there.
Yeah, a lot of the intraday stuff is random. You don't know who's got what on their desk, what they're buying, what they're selling.
Maybe they know something about the inflation print for tomorrow. No, I'm just guessing. That means nothing. All right, guys. The close is up next on Bloomberg TV. Coming up for us, we're going to talk a little bit about the labor market, the Harvard of trading, and the relationship between the U.S., China, and Taiwan. That's next.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Bloomberg Business Week continuing on radio, TV. No, not on TV. We're on radio, YouTube, and Bloomberg Originals. I'll get it eventually. It is Tuesday, May 14th. I'm Carol Massar. Tim Stenovec is off today. And this on a day when I'm looking at the markets, and you've got the S&P 500 close to an all-time high before that closely watched CPI report. We'll get that at 8:30 a.m. Wall Street time tomorrow. But we've seen some buying. It looks like we're near our highs of the session. We'll get into the trade in just a moment. Coming up, though, in the next couple of hours, a staggering 38% of the U.S. workforce, about 64 million Americans, folks, they do freelance work. At least they did so last year. And that is from a new report. We're going to get into it with the managing director of the Upwork Research Institute. That's coming your way in the next 60 minutes. Also, the Harvard of Trading that ruined thousands of young people's lives. This story is among our most read on the Bloomberg. We're going to check in with Stephanie Chu at the global fintech platform Portage Ventures on AI and accuracy in the fintech space. And then we're going to get into the complicated relationship between the United States, China, and Taiwan. It's all in a new book. So that's all ahead in the next 2 hours. Bloomberg Business Week, by the way, brought to you by BNY Mellon Insight. June 4th to the 6th in Nashville, Tennessee. Do not miss the essential event for the financial advice community. Visit insight.bnymellon.com. All right, as we mentioned, I was just talking with Barry that we're seeing some buying here in the last hour or so of trading. Let's get a check on that trade and your top business stories. Let's turn it over to Charlie Pellet.
Thank you very much indeed. I can confirm we are at the high of the day right now with 58 minutes to go until that closing bell clangs on Wall Street. Right to the numbers here. Fast-moving markets to the upside today with the S&P up 23, up by about 0.5%. We got the Dow ahead of the CPI report, up 131 now, up 0.3%, while the Nasdaq Composite Index is up 118, up by 0.7%. 10-year 4.44% with a 2-year now yielding 4.81%. Spot gold up $20 the ounce to $23.56, up 0.9%. And West Texas Intermediate crude oil now at $78.05 a barrel, up by 1.3%. Fed Chair Jay Powell says the central bank needs to be patient as it awaits more evidence that high rates are curbing inflation, doubling down on the need to keep borrowing costs elevated for longer.
I don't think that it's likely, based on the data that we have, that the next move that we make would be a rate hike. I think it's more likely that we'll be at a place where we hold the policy rate where it is.
Powell's remarks were carried live on Bloomberg Radio. Meme stocks moving higher today, again piling on the gains. Right now, GameStop up 43%, AMC Entertainment up 26%, and Tupperware up now by 11.1%. Recapping, U.S. stocks higher, S&P just about the best level of the day right now, up 24, up 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to and watching Bloomberg Business Week on this Tuesday. We want to get to a little bit more on the markets. Charlie breaking down some of the numbers. We had a lot going on today. You had Jay Powell speaking, an inflation print that at first blush seemed worrisome, and investor interest again big time in those meme stocks. And yet it did feel like stocks were struggling to find any clear direction, momentum, although we're seeing a little bit of momentum as of late, or at least a direction. Let's get to it with Bloomberg News Chief Markets Correspondent Abigail Doolittle here in our Bloomberg Interactive Brokers studio. First of all, it's funny, Barry and I were kind of like, you heard him talking about when you see kind of a significant move in the chart, and intraday moves, whether or not it means anything. But I don't know, it kind of stands out in a day that's been kind of blah.
Yeah, it does stand out.
Or does it to you?
Well, it does and it doesn't. So it does from the fact that earlier today, stocks had basically been doing nothing, basically flat, fluctuating between small gains and losses. Now, relative to the near-term range of the last 3 days, we are at the highest level that we've been at, but nonetheless still sort of stuck in a range. The other thing I would point out, volume, which is one of our favorite topics, yes, 17% below the 20-day average. So investors really treading water here. It is to the upside. A big piece of it, chips. NVIDIA up 1.3%. The stocks up 1.5%. The NASDAQ 100 outperforming right now, up 0.6%. So I would say it's really that CPI number. Is that going to come in line, hot, or in some other way? Another thing that Charlie was talking about this really does stand out, and it's hard to make head or tails of. But the Russell 2000 outperforming up 1% on these meme stocks. GameStop stop at the, I know, it's just like all we can do is shake our head. And also, especially when we bring in Roaring Kitty into the conversation.
I know. Every time I say it, I'm like, really?
I mean, exactly. And that's, you know, so it's really, you know, in terms of what Barry was talking about, saying that people try to fill in the narrative the next day, that commentary I really appreciate, because at the end of the day, it's price, you know, and I think that these meme stock conversations really exemplify that. Nothing is changing for these companies, but all of a sudden you have a meme of some guy sitting and, you know, looking forward to his game controller.
Like he's getting ready to do something.
Yeah, and these stocks are up 100%. So.
What, is there anything constructive when we look at something like AMC, which was up 128% today at its highs? It gained almost 80% yesterday. It's now up 23%. GameStop at its highs was up almost 113% today. It's now up 40%.
Yes.
And it gained almost 75% yesterday. Is there anything constructive when you talk to market watchers? Is there anything that or do they just kind of dismiss it?
I think that it speaks to the frothiness of the markets. I mean, if these investors feel so emboldened that a stock that, you know, GameStop, just in the middle of April, it was a $10 stock.
Yeah.
Earlier today, it was a $60-something stock. Now it's a $42 stock. Nothing has changed for this company, and we could make the case that the company has its work cut out for it. As you know, games more so go digital. What does it do with the real estate? So, putting aside the fact that the fundamentals haven't changed, the fact that you have investors willing to double, triple, quadruple a stock in such a short period of time. Again, it's that emboldenedness. If we were to really read into it, does it mean that they think that the Fed is not going to be hiking, as Fed Chair Jay Powell has said? Does it mean that they're going to be cutting? I don't know. I mean, I think that this whole Reddit trading movement is a little bit disconnected. Again, Roaring Kitty really kind of creating an example.
It's hard to be serious.
Yeah, it's hard to take that. But some people are really making money.
Know.
Some people are losing a lot of money, though.
I know. RSI in the S&P 500. It looks like we're getting a little bit overbought again.
Yes.
So I do wonder, you watch things technically. I also think about how you roll in the fundamental backdrop for stocks.
Yes.
Is there anything significant that we need to know?
So with the S&P 500, similar to what we had talked about last week, the most significant thing right now, and it is starting to gain a little bit of traction, is the fact that right now the current high is a little bit lower than the high in March. So you're going to hear people start to talk about the possibility of a double top. If we don't make a new high, it could be a strong double top, because when the second high is lower, it means that the dip buyers, they're not quite as aggressive, setting up the possibility for the sellers to really swoop in. The RSI right now is not quite overbought, but what it is, and this is very concerning to me, is in this long series of lower highs, just suggesting that these highs, that the momentum, there's less enthusiasm on the part of buyers. It's going to Roaring Kitty and GameStop and AMC.
All right, so good to know. Don't go there, don't go there. Turn away, look away. Abigail Doolittle, always appreciate it. She's our Bloomberg News Chief Markets Correspondent. You are listening and watching Bloomberg Business Week. It's also a story that's among our most read on the Bloomberg today. It's a story about IM Academy, also known as the Harvard of Trading, that grew from a small New York operation into a global phenomenon during the pandemic by selling the promise that it could teach anyone, particularly teens and 20-somethings,